we will start discussing on the here what we are trying to today and next session. I'm trying to discuss about the corporate customers and key features of Companies Act 7 of 2007. Here, banks, we deal with customers, and we should know what are the types of customers that we deal, and what are the when you come to Companies Act, what are the new introduction of the law which are relevant for the banking sector. I have highlighted certain features of the Companies Act which are relevant for the banks. So as a bank, or if you're working for a financial institution, you should know those features, right? That's why I have included those points in this particular set of slides, as well as most probably, I don't know whether you will get that assignment today. You will get the assignment as well. So there is a 20 mark assignment. So it's mainly based on the governance area. So just inform the others as well. Request them to join for the sessions. And there is no assurance if they are not joining for the sessions continuously that they will get through the exam. So that's the message that I want to pass. Especially when you come to my area, I'm very strict. I don't want the theories. I want the practical aspect. If I see that the practical aspect is not touched, students will not get the required marks, right? So please communicate this message because this is important, right? Now, when you come to bankers, it's a very common and important topic that we discuss. It's KYC. Now, what do you mean by KYC? I think I discussed this point at the beginning as well, but I want to repeat this because all our transactions are based on KYC. Now, what is KYC and what you do as KYC? Can someone tell me what is KYC and what you do as KYC? Kaushalya, can you tell me anything about that? So when you're talking, please on your camera and talk. Right. Kaushalya, can you tell me what is KYC and what are the things that you do as KYC? Kaushalya?
So KYC means know your customer.
Can you please on your camera? So those who
Okay.
are... Okay. Yes. What happened? Nuani, can you explain what is KYC? Please on your camera as well. Nuani?
Yes, sir.
Yes.
KYC means it's a know your customer.
Okay.
It's all about the customer that we are dealing with,
Okay.
his financial history,
Okay.
and his or her occupation,
Okay.
the method of taking money for deposits or investments.
Right.
And actually we assess the risk of the customer and due diligence using KYC.
Right. So now what you do is you take you give them a questionnaire and you get the feedback.
Yes.
Now, do you still know about the customer, though you have the document from the customer?
Actually, no.
Yeah. So that's a practical issue, right? So what I see is that financial institutions they take this KYC form because it's an audit concern. When the auditors are, when the auditors go through your documents, when you don't see the KYC, they raise that. Top of that, If the KYC is not there for the accounts, for you, they can charge penalties over your company, financial institution. Recently, I saw there were a few penalties imposed on banks for not having KYC. Uh, Ivani, please, or off your mic, mute your mic, please. Right, thank you. So that is one reason what I say. Uh, Kaushalya, can you add anything? We are once again back. What is KYC and how do you look at KYC and whether we really know about our customers? Kaushalya? Kaushalya? Kaushalya, are you? Hope that you can hear me well. Okay, right. Uh, right. So, from a practical perspective, KYC is just a form. Unfortunately, bankers, they don't know about their customers. They take this document just to avoid the audit concern. Now, why KYC is important? Because KYC gives you a lot of opportunities to understand about the customer, his background, his close relations, his transactions. So it's actually the KYC should come. You have to use this as a marketing tool, because through KYC you can add a lot of value to your organization, especially when you come to cross selling, right? So what I see is, rather than it's an operational requirement, it's a marketing tool. You can use this information, customer information, for you to get more close understanding about the customer. So if you are doing it that sense, definitely you will get the opportunity of getting the proper required KYC, not just filling a form from the institution. Now, there are different types of customers. What are the types of customers that you all know? Yes. Can someone voluntarily tell me what are the types of customers that you all know? Yes. Sandhya, can you tell me what are the types of customers that you all know in your organization where you are dealing with customers? What are the types of customers that you deal?
Individual and corporate
Indi-
customers.
Individuals and corporate. What do you mean by individuals? So,
Uh,
a common statement when I'm asking a question, please on your camera and answer, because this is should be an interactive session. I don't want just a theory, passing theories. Yes. Can you just say, okay, what do you mean by individuals?
persons on the people, individual coming from to a bank and
Okay.
companies and another related, not individual, corporate bodies
Okay.
like companies and partnerships and also
Okay.
I think.
Right. So simply you have individuals, that is individual and joint account holders. A joint account holder means you can go up to 3 or 4. There is no restriction on that. And you get individual, that is a sole proprietorship, partnerships, and companies. So when you come to lending perspective, you lend for individuals, you lend for joint account holders, you lend for sole proprietorship, you lend for partnerships, and you lend for companies. From a deposit perspective, now why uh, uh, do you all lend for clubs and societies? Chaturanga, do your organization lend for clubs and societies? Yes, clubs and societies. Chaturanga, do you all lend for clubs and societies? Chaturanga, Strongly side. Chaminda, do you all lend for clubs and societies?
Uh, Sam Dennis,
Yes, please.
no, no, we are not lending clubs and societies
Any
because
particular reason?
yeah, once in a year the office bearers might be changed.
Okay.
Therefore, we are not. But it can within 1 year's period. If they ask
Yeah.
the tenor
Okay.
period within 1 year's period, then we can. Otherwise, if
Yeah.
more than 1 years, we don't.
Yeah. So less than tenor, you can lend, but at the same time, if you can get the personal guarantees of those office bearers, even for a longer tenor, you can lend. Now, if I'm personally responsible, whether I'm in the exco or executive committee or not, is immaterial because there's a personal liability. So because of that, normally the financial institution, they don't lend because of this nature of changing office bearers very frequently. But if you really want, you can lend against the personal guarantee. Advisable less than the tenor, but even if you want, you can go beyond that, but not for 20 years or 15 years, 10 years, nothing more than 2 years from a practically recovery perspective. Right. So basically, we have individuals, that is individual and joint account, sole proprietorship, partnerships, and companies. Here we are talking about the types of corporate. So it's 100%. It's not accurate to say corporate customers. It's just say customer. Corporates normally we say the understanding is where sometimes the bankers say, okay, only companies are corporates. Fine. From a definition perspective, you can argue only the companies can be considered as corporates, but even a partnership is also a business. Sole proprietor is also a business, but different features are there, right? So if you really want, you can include into the category of corporate, but more prudently, more categorization wise, we normally say the companies. But even among the companies, sometimes some say, okay, it's the big companies, we say corporates. No, when you come to a company, it's whether you are small or big, finally you are a corporate, right? You are an artificially created person. Therefore, you have to categorize them all in together. But whatever said and done, you will have different types of customers, individual, joint. It's one category, sole proprietorship, partnerships, and companies. Now, when you are taking documentation, this is the biggest issue what I see. Now, I can challenge all of you all. You all are reflecting, representing different financial institutions. I can challenge all of you all. If you all bring 10 files, security files to me, I will prove that 9 out of 10 are incomplete. So if you're going to say 100% your documentation is perfect, I'm 100% sure that your 100% documentations are not perfect. If your documentations are perfect for 100%, you should have gone for debt recovery provisions. Since your documentation is not perfect, you can't follow the debt recovery provisions. As a result, you are following the money recovery action, right? So simple terms, bankers, they lend without obtaining the required information, required documents for them to go for debt recovery. So our end mark should be not to go for money recovery action and drag a case for years and years. Your target should be to go for debt recovery and finish the case within a year. So if you follow the debt recovery provision, you can finalize and finish a case within a short period. But unfortunately, when the bankers are not following the basic common sense principles, when you come to banking, relevant for the banking business, they get incomplete set of documents, and as a result, they can't go for debt recovery action. So sometimes you might think these are very basic things. Yes, these are basic things, but we should know the basics first before you go for advanced. Because now any bank who has the common sense can run a good job, do a good job. So unfortunately, what I see is the common sense aspect or the basic aspect is not there. So when you don't have the basic aspect, it's very difficult for you to go for the advanced level, right? You gradually you get through grade 1, 2, 3, 4, 5, and 6, 7, and then you go for the O levels and you can go for the A levels. You can just jump for the A levels. If you don't know the basic processes in the banking in the normal education. So similarly, I'm touching these basic points because these basic points are very important. Now, when you want to open a sole proprietorships accounts, what are they say? Forget about a facility. Just tell me what are the documents that you have to request from a sole proprietor, and who is a sole proprietor, and what are the documents that you request from a sole proprietor? Yes, Pushpa Kumara, can you tell me? Yes, yes.
Sole proprietor is the person who owns a business, who runs a
Okay.
business, and we are asking from him the business registration
Okay.
for opening an
Now,
account.
okay. Now, if the business registration is issued in to a 2010, that is 2010. Now, tomorrow he is coming to open an account. Can we accept that the copy which was issued in 2010 and open the account?
If he belongs to original, then doesn't matter.
Okay. How do you know whether throughout last 11 years whether there were any changes in that business?
Otherwise,
How-
we can ask him to get a certification from the AGA office.
Yes, you had to request a certified copy from the divisional secretariat. So what I see is when you come to sole proprietorships and partnership, this problem is there. Bankers, if they go through this original certificate, if the original certificate is issued in an old document, you're not supposed to open the account. How do you know now in case of partnership or in case of a sole prop, how do you know whether they have changed the business nature? Whether the partners are the same partners, right? How do you know whether the business address is the same address? Whether the partners have changed their addresses? So you need to get a certified copy from the divisional secretariat, not the original, a certified copy. This is a true copy of the original, or subsequent to this original, there are no changes. So then you are sure that you are opening for an account, opening an account for a sole proprietorship or a partnership based on the latest information, right? Based on the latest information. So make sure that you follow that and obtain an update copy. So what I see is the bankers, they open account for old documents, which is wrong, right? Now, who can sign this in case of a sole proprietorship? Who may sign? Nuani? Sorry, I asked a question from Nuani, no? Right, Pushpa Kumar, can you tell me who is supposed to sign on behalf of a sole proprietorship? Is it only the sole proprietor or anyone else on behalf of a sole proprietor? Pushpa Kumar? Sampath? Sampath Fernando?
So only sole proprietor should sign.
Okay. Can't he give a power of attorney to someone else?
He can.
Yeah. So not only the sole proprietor, even the power of attorney holder can sign. Right now, how should he sign? Whether now normally in practical sense they have to have a seal, rubber stamp, right, Sampath? Now, is it mandatory to have this rubber stamp and sign, or do you have any alternatives on that, Sampath?
Seal is mandatory.
Okay.
So it is mandatory.
Yes. Anyone else can answer for that question? Seal, is it mandatory? Yes. Now, for an example, I am a sole proprietor.
That
Yes, Shan?
in the in the absence of rubber seal,
Okay.
we can write the name of the entity in a
Okay.
proprietor. Then we can get the signature of the proprietor
Okay.
in a
If you are
special case
sign,
where the rubber stamp is not there.
okay. If I'm issuing a check, Are you in the same stand, Sean? Now I'm issuing checks under my sole proprietorship. So I have not placed my seal. Instead of that, I'm writing on by using my handwrite a pen to say I'm a sole proprietor of this particular sole proprietorship. Is it acceptable, or is it your argument is right only for the documentation? Sean, what is your view? Sean?
I think we can accept since he's the only authorized person to sign the check. We can accept that check in a special occasion where the seal is not there.
Yeah. So the point is we are advisable not to allow the sole proprietor to sign checks without the seal, because normally a seal is part and parcel of his instructions. So I'm giving my instructions in your mandate. I will place the seal and I will sign. And so if you get a check, if you receive a check where the seal is missing, it's part of the instructions are missing. So please make sure sometimes the customer is not the person who is bringing the check, or he is not coming. If he is coming and if he is writing on in your presence to say sole proprietor and placing the signature, fine. Because if a third party is bringing that check without the sale, you have to be very careful. Now, when you come to documentation, most of the time the customer comes and signs. So if he failed to bring the seal, as Shan very correctly said, that you can request him to sign sole proprietor by using a pen, sole proprietor, ABC Enterprises, and place the signature, right? So that should be the approach. Plus, please make sure don't ignore these things are important, because sometimes banks, they ignore. And also in his absence, he can appoint power of attorney to sign the document. So not only the sole proprietorship, sole proprietor, even a partnership can, power of attorney also can sign the document. Now, when you are typing the document, in my slide, I have given you how to type. A of, that is, A means the sole proprietor's name, individual name. Of is his address. Sole proprietor of the business carried on at, that is the address under the name, sole proprietorship name. So when you are typing a document, you have to make sure that you type following these rules. First, the sole proprietor's name and address, then the sole proprietorship's name and address, address and the name, because there can be two addresses for the sole proprietor and his business. Business is carried on in a different place. So then you have to ensure that what is the office place and what is his personal address. So unless if you have not typed in this particular manner, at least from tomorrow, or once you go back to your office, follow these steps. These are very important basic principles. Now, can you issue an offer letter, right, in the name of sole proprietorship? Sandhya, can you all issue a offer letter for a facility? I'm the sole proprietor. My name is Lasantha Senaratna. I have LS Enterprises. I have obtained a loan from you, your organization. I'm default. Now you want to send me the letter of offer letter. Sorry, before that, you are going to issue. I have requested for a facility. You are going to give me the facility. Now, Sandhya, can you issue me your offer letter to say LS Enterprises? Sandhya?
Yes, sir. Yes,
Can.
sir. Yeah.
You're sure? Yeah. Any different answers? Vijendra? Vijendra? Can you issue the offer letter in the name of LS Enterprises?
Yes, sir.
Can. Okay. Amir, what's your view?
Yes, sir. I also don't see any harm in that.
Okay. Right. Understand that sole proprietorship name is not a legal person. So you're addressing a letter, offer letter, or for a letter of demand in the name where that particular entity is not a legal person. So if you are going to issue the offer letter, LS Enterprises, number 10, Gold Road, Mount Lavinia, you are not addressing to the sole proprietor, because in case of a sole proprietorship, sole proprietor is the legal person. So how you have to address is Lasantha Senaratna, sole proprietor of LS Enterprises, number 10, Gold Road, Mount Lavinia. You need to address the sole proprietor, not the proprietorship name. When you want to purchase a property in the name of the sole proprietorship, you can't purchase the name of the sole proprietorship. You have to purchase the property in the name of the sole proprietor. So please make sure if you are addressing any document for a sole proprietorship or a partnership, you can't address in the name of the sole proprietorship or the partnership. You have to address in the name of the partners or the sole proprietor. Right? One particular day, the court might reject your document to say LS Enterprises is not a legal person. When you are taking action, when you are entering into a contract, you have to enter into a contract with a legal person. So I know that your argument is where the sole proprietor is responsible. There is only one person. Maybe how many LS Enterprises are there in Sri Lanka? Do you all know how many LS Enterprises? If I want, I can have 3, 4, even 100 registrations under LS Enterprises in different areas. Any one of you all can form LS Enterprises. So the uniqueness comes with the person behind that. This LS Enterprises this is Lasantha Sena, LS Enterprises. This LS Enterprises is Vijayaratna Hevage's LS Enterprises. So you need to address to the sole proprietor, not to the sole proprietorship. Very clearly understand that point. Okay. So these are basic things, but this will lead you to reject your documents in front of the courts. These are the mistakes that you all do. And as a result, you will not be able to exercise the debt recovery provisions in the courts. Okay. Any questions? Any questions? So for those who joined late, time to time I'm asking questions, so you don't have to worry anything about that. Whether you know the answer or not, you don't know the answer is not a problem. But please on your camera and give me the answer, right? Because this has to be interaction session, interactive sessions. Otherwise, no point. We are finding solutions for your problems. I'm not here to discuss theories, because theories you can extract from any book, but practical things you have to discuss. Okay. Any questions? No. Now, when you come to partnerships, what are the documents that you have to request? Partnerships? Yes. What are the documents that you have to request? Kaushalya, can you tell me what are the documents that you have to request to open a partnership account? Now, what is a partnership and what are the documents that you have to request to open a partnership account? Kaushalya? 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 Nuvani can tell me? Nuvani?
Partnership agreement
Okay. What else? Anything else?
and the business registration.
Okay. What else? Anything else? Anything else? Now, okay, before highlighting that point, individual if I want to open an account in your bank, what are the documents that you're going to request from me? Yes, what are the documents to open an account? Sampath?
The NIC.
NIC. Only the NIC. Can tomorrow can I come and request you to open an account with the NIC? That's it.
Mandate is required, no?
Yeah, obtaining a proper mandate is required. Okay, now if I say now when you go through this NIC, can you read the reverse of this NICs? Most of the NICs? Yes. Amir, what's your view? What is your experience over that?
Uh, Most of the time it's quite difficult.
Okay, so then what is your option? Next option.
Then, gentlemen, we either request for the driver's license, or
Okay,
worst come to us, we request for a GS certificate.
that is Gram Sevaka certificate.
Yes, yes, sir, yes.
Okay, it's confirming that so and so is so and so.
It's a yes, yes, legitimate person in what, and someone is confirming it. Yes.
Yeah. So from a legal point of view, the main identification document is NIC. If the NIC is not available, it's the valid passport, right? But very recently, in the sense one of 2016 FIU rules, they were talking about a driving license. But legally, identification documents are NIC and the passport, not the driving license. But for banking purpose, I know majority of our transactions are through driving license. The main reason, NIC, you can't see his name on the reverse. As a result, you get the driving license because you have the NIC number. That's the whole idea, right? So make sure that you identify the person and open the account, right? Whatever the method, you all have different internal methods. I have no objections on that. Make sure, but now I have seen in certain instances, sometimes the FIU, when they ask for a photocopy of the NIC, reverse, you can't say anything. So I can't understand why bankers open accounts for this kind of NICs. You can see because most of the NICs are obtained when you are doing O levels. How many of you all have the same old O level NICs? Anyone who doesn't have the O level NIC? Have you all updated? As Sri Lankans, have you updated your NIC?
Yes, I have updated.
Okay, what about the others?
I also updated.
Okay, what about the others? Silence means that you all have not updated, right? That's the assumption, right? So the point is where if tomorrow, if we stop obtaining driving license, all the people will start updating their NICs, right? A driving license is there for driving, not for identification. If you give this driving license to courts, they will throw you out. So please make sure if you are going to courts, if you are giving evidence, right, you have to have a proper NIC where you can see the name or your valid passport. So be careful. And also the KYC documents. If there is any changes with regard to your billing proof, right? You need to give those documents as well when you're opening the account. Now, when you're opening the partnership account, right? Quite correctly, there was an answer to say you need to get the partnership agreement. Earlier, this requirement was not there. Earlier, obtaining partnership agreement was not a requirement from the banker's perspective. Once again, with one of 2016 set of rules, they introduced this requirement of obtaining the partnership agreement to understand what's the nature of this business of this company and how they are doing it, who are the partners, who are the people behind that, and what are they trying to do. Otherwise, partnership agreement was not a requirement. And top of that, you need to get the business registration. Once again, a certified copy, updating, to say that this is the true copy of the original, and signed by the divisional secretariat on a very recent date. So don't open partnership account for old original certificates, because we don't know whether the same set of partners are currently in that particular partnership, right? And above that, okay, so those are the documents, and also you have to get the NIC copies of each and every individual and their KYC, and simply who is going to sign the document. This is very important, right? Now we will say there are 10 partners in a partnership, right? And Sampath, can you tell me how, in case of a facility, how many partners should sign? And in case of operating instructions or issuing a check, how many partners should sign? Sampath? Shan?
To,
Yes, Sampath?
to open the account, all should sign.
Mhm.
As per operating instruction, they can sign in the check.
If they want a facility,
All should sign.
all should sign. Right. Shan, do you agree with that particular argument? Is it right or a different view?
Yes, sir. Yes, sir. For bank, for drawing checks, according to their instructions, we two or three partners can sign.
Okay.
For requesting a banking facility and security documentation, all the partners should sign. And if there is a power of attorney, for suppose there are if they have given a power of attorney for 5 partners, power of attorney should sign 5 times on behalf of each partner.
Correct. Correct. Right. So simply all the partners should sign for a facility. When you're opening the account, all the partners should sign. When you're issuing checks, depending on their instructions, either 2 partners or 1 partner or 2, 3 partners can sign. But if a power of attorney is given to 1 partner, where there are 5 partners, or the power of attorney holder should sign for 5 times, reflecting each and every person. So when one important point, when you're allowing them to appoint a power of attorney, always make sure they appoint an existing partner as the power of attorney, right? They should not you should not allow them to appoint an outsider as a power of attorney, because finally partnership is where 2 or more people running a business with a common view of earning profits. So when an outsider comes, there is no common view. He's an outsider. He doesn't have any interest over this particular partnership. So sometimes there can be problems. So best would be request them to appoint an internal person, a partner, as a power of attorney holder, and proceed. Now, why all these 5 partners are signing? Yes. Why all these 5 partners are signing? Why can't you just get 2, 3 partners signatures similarly to issuing checks? Vijendra, what's your view? Why all 5 partners are signing? What is the basic theory behind this? Vijendra?
All parties are liable and responsible.
Yeah, what type of a liability is that? What do you mean by a liability? What type of a liability is that? How do you
Ex-
call that liability? There is a technical term by what we use. Yes, there's a technical
For a
term.
loan,
Yes, joint and several liability. When you want to create a joint and several liabilities, each and every partner should sign. That's the whole idea. What do you mean by joint and several, Amir? What is joint and several?
Yeah, as a whole, they are liable as well as individual.
Yeah, as a whole, all partners, their liability will goes with their partnership agreement. So equally is the understanding, but if the partnership agreement says differently, you have to apply that. Or if 4 partners can't pay, the next partner will have to pay. So joint together or severally. Each one should get the liability. That is why all the partners should sign. Now, in case of a guarantee, I will touch that point also here. Since we are discussing here, I will briefly touch at the later point as well. In case of a joint and several guarantee, there are 5 guarantors where you have type 5 names at the first normally in the second page, but you have there are according to your document, it says 4 guarantors have to sign, but on the last page only 3 have signed. Now what happened to this particular personal guarantee? There are 4 guarantors names, but only 3 have signed. Now what happens to this guarantee? What happens to this guarantee?
It cannot be accepted, isn't it?
Yes. So what you're trying to say is null and void.
Yes, basically.
Okay. Can someone else give an answer on that? Taranga?
Responsible for signing guarantees only.
People who have signed will have to take the responsibility. Chaminda?
All partners has to be signed. All 5 partners, as you say.
Okay. So then what happens if only 4 has signed, 1 partner has not signed, or 3 has signed, or 1 partner has not signed?
We are not accepting as a bankers.
Yeah, it's null and void. The document, it's joint and several guarantee. If 1 partner has not signed, it's your negligence. You can't use that guarantee to make other parties responsible, Sandhya, right? They're not responsible. They agreed to sign collectively, but due to your mistakes, you have obtained only 3 parties signature. So you can't make the rest of the parties even responsible for their amounts. If it is 4 million, 1 million each, only 3 have signed, you can't say, okay, then you give 3 million. No, even from that, their responsibility will be over. You can't make them responsible. So these are very simple mistakes, but finally, your facility is unsecured, right? So when you are taking a partners, joint and several guarantee, make sure that you get a proper joint and several guarantee with all partners, signed by all parties. Otherwise, you will lose the joint and several feature, as well as you will not be able to exercise in court of law. Any questions? So fortunately, maybe that you all have not got that kind of experience where the customers, they have paid, and if they make an issue, right? If the opposing lawyer object against these documents, you will have problems. Any questions? Right. So then how to type, method of typing?
Sir,
Yes.
sir,
Yes.
suppose a check is presented in the morning where a partner has signed.
Check
What are the
presented
actions
in,
we should take?
check presented in the
In morning
morning.
clearing.
You're talking about
Morning
inward
clearing.
clearing. Inward clearing.
Yes, inward clearing. Yes.
Okay.
The
So
partner
yes.
has died.
Okay. Your partner has died today or any different day?
Suppose in a different day. Before the check is presented, he has died. What are the actions we have to take?
Yeah, the point is where now on the date of paying, if you have received the partner's death, you have to immediately, when you receive the notice to say the partner is dead, you have to seize the account. Thereafter, no transactions. Otherwise, the Clayton rule will apply, right? So whether the partner died yesterday or day before yesterday or today, if you have official information, or if you all have participated for that particular funeral, even the other partner is not going to inform you, you know that partner is no more there. So automatically you can return the check to say partner deceased, account, whatever the standard remark that you are going to place in that particular check. Maybe the check has been presented prior to his death, but you don't have evidence over that. You don't know, right? Because you got the information through official information where the partner is no more living. So based on that, you have to act and you have to return the check. Second question, you received a check, but you don't know whether the partner has whether the partner is living or not. So in such an instances, you can pay the check. That's it. Shan, is that the answer you wanted, or you have a separate scenario for me to clarify? If you have a separate scenario, please let me know.
Suppose, sir, we got the news, not in an official way, just
Okay.
a call from a client or another partner. How we connect? Can we take the consent of other partners and honor the check, or should we return the check pending Rose confirmation?
Yeah, so the best would be now you and then other partner has given you a call and told, okay, so and so is not living, right? So then the point is where if you can rely on that particular information, you have to react on that. So you can say payment postponed pending drawer's confirmation. No harm, you are not going to say RDA, return to drawer is not there. So you are just temporarily you are postponing until you get the information, proper clarification, right? So here, if you really know where you have also attend for that particular funeral, and if a partner is giving a call and telling you, look here, this partner is no more there, don't pay, you know that he is no more living, don't pay, right? That's it. So the point is where how you are going to establish that information, whether it's true or wrong, is the method. Now if you have doubts, return the check pending drawer's confirmation. If you know that this person is not living, use the required standard remark and return the check. Right, Sean? That's what you wanted?
If it's not come from an official source, can't we honor the check with the consent of other partners?
Official source in the sense, what do you mean by, just tell me, can you tell me what type of official source you are talking here?
A call
source?
from a friend of a dead partner, not
Yeah,
from partners. A call from another client who knows that died partner. Can we get the confirmation, consent of other partners and honor the check?
So simply, if you are giving a call, the point is where when you now automatically the account will get, you have to seize the account when you receive the death notice of the partner, right? Otherwise, what will happen when the money moves out, the liability of the death partner it's going to reduce. So if the rest of the partners are not objecting for the payment, if you know that he is dead, I have no issue on paying, but it depends on the amount as well. If it is a acceptable type of amount which is in line with the transactions of that particular partnership, no problem, because you have to have official what do you call, the consent to say that so and so is not living. Now what happens here, you have not got the official confirmation and one of the friends are calling, and at the same time you are getting the confirmation from the rest of the partners. So don't you think it's official and consider not to pay? Or if you want to pay, just get the written consent from the existing partners and you can pay. But it has to be within the pattern of that particular account. Now, when you want to pay checks, that's another mistake. Bankers, they don't understand, they don't study the pattern of that particular account and they pay checks. Now, for an example, if I'm an account holder, I have a pattern. According to my pattern, I don't issue any checks more than 100,000. I don't go for any withdrawals. My average income is this amount, right? So you know, you can understand my pattern. Now you know my parties whom I'm issuing to checks. But if you get an unusual type of a transaction, you are not supposed to pay without my confirmation. So simple argument, you are not supposed to pay if you get a confirmation because you are getting the confirmation from the rest of the partners that so and so is not living. So then you can't pay actually, right? But at the same time, depending on the pay, if it may be an insurance payment or it can be a serious, it can be a tax payment, right? Depending on the official confirmation in writing, you can honor the check, because your argument is where the check was issued prior to his death. But make sure if the check is issued after his death, even with the consent of the rest of the partners, you can't pay, because there is no existence of a partnership after the death of the partner. So you can't use that partnership thereafter. But if you have adequate information to say this check was issued prior to his death with the consent of the rest of the partners, uh, looking at the amount, looking at the payee, looking at the pattern, there is no issue. Because finally what you have to do is, now this is another problem. Bankers, they get into trouble just trying to help the customers. You want to help the customer, and finally you are violating all the internal rules and regulations of the bank. So don't do that, right? I know that the customer is important. I have no issue on that, because of the customers only we are living. We are getting all our salaries and enjoying benefits. But that doesn't mean you can't violate the law. If something goes wrong, you have to write explanation for this action. So make sure that you play within the rule. And if you have an exceptions, if you are going to do something different, get all possible required information and proceed with the transaction. Okay, Shan, is it clear now?
Yes, sir, it's clear.
Yeah.
Suppose the partnership enjoys a overdraft facility against the security of the died partner. Then how we gonna act? How the clearing rule will apply?
Yeah, you have to seize the account. You can't proceed with that, right? So then thereafter what you have to see is you have to ask from the other partners how they are going to settle. If they say, okay, you release this particular property, we are going to give another new set of securities, and they are going to form a new partnership. Earlier it was ABC, A is no more there, now BC partnership. So they have to form a new partnership under BC, and if they are going to give a new set of securities under that, you can release A's property and take proceed with BC account. But if they say no, we don't have assets, only this asset, then you have to go against this A's asset and recover your outstanding. That's it. So the consent given by the other partners for the existing liability is very important. If they agree to take over the liabilities of the previous partnership and with a new security, they can't use the old security, because the partner who owns the old security is no more there, right? So they have to bring new securities as well as a new partnership. You can't continue the facility. You can continue the facility under the new partnership name with new securities, not the old partner's security. Is it clear, Shan?
Yes, sir, it's clear.
Okay.
Until such time, we can't honor checks, no?
No, you can't honor checks. You have to seize the account. You have to return all the checks. So best thing would be you request the rest of the partners to open a new account under the new partnership and get an undertaking from them. All checks issued under this particular partnership, we are going to take over the liability. So it's you are paying from the new partnership, or request them to cancel all the previous checks, because most probably you'll be continuing the same account number. You are not going to change it. Most practical sense, you will be allowing them to use the same account number with the new partnership. So if they agreed in writing, and if they request you to pay these checks, check number, amount, pay, and give the list to say these checks were issued when the partners were ABC, and we undertake to for the liabilities of those checks. And if the new partnership is going to give an undertaking along with the indemnity, you can pay those checks. So otherwise what will happen, sometimes they might lose businesses if the check is going to return. So first request them to, as much as possible, to replace the check. If they say no, we have given this for a bid, and if they're going to withdraw, they will lose the bid or something. Finally, it depends on the payee and the transaction as well, what action you should do. So if the new partnership is ready for the liabilities of the previous checks as well, you can proceed. Right. So don't make it too much complicated. I know that your way you talk very clearly shows that you want to assist the customer, right? So the Clayton rule is a rule. As far as what it says, the first in, first out. So whatever the money first that comes to the credit into the account, all the liabilities, previous liabilities will be settled. So then what happens? The debt partner's liability will be zero if you're keep on crediting the funds. That's the rule. So what you have to understand is, from a banker's perspective, as far as the new partners are agreeable for the old debts, old liabilities in writing, with an undertaking, with an indemnity, you can transfer these liabilities to the new partnership and continue. No issue at all. So once again, I just want to establish all these things, all these actions taken by you all depends on KYC, know your customer. If you know them well, you can take a decision. But if you don't know, you can take flexible decision over that particular company or against that particular partnership. Right? Anything else, Sean? Very good set of questions. Very practical nature of questions there.
So
Yes.
suppose if other partners can't introduce a security,
Okay. So then you
and
have to take action against the existing partner property, where you have to substitute the legal heirs of that debt partner for the case and continue. So there has to be a substitution. Original partner is no more there, then you have to find the legal heirs and file the action. That's the option available for you. So all these are very complicated things. Father is no more there. There can be wife and children where wife don't know anything, and the children, they are also minors, right? So they are or rest of the two partners are trying to move out from the liability. Poor this family will have to pay that may be their own house, right? So now you are going to take action against that particular property, where sometimes these children and the wife, they have not got any benefit out of that. Those two partners got the benefit. Now they are going to say we don't have any assets and we are going to move out from the asset side, or the giving another security. So all these are very, very sensible type of issues. You have to be very careful. Don't be too much technical as well, because you have to see the current situation. Maybe that other two partners are trying to slowly move out from the liability, just to say that so and so got everything and now so and so is not living. So when you go back to the so and so's legal heirs, you can see a very pathetic situation there. So be careful. Otherwise, bankers, they can use their rules and regulations, but be a little bit sensible and use the, you need to think about the other aspects as well. Legally, you can do anything, right? But try to get the rest of the two partners into the loop and try to get something from them as well. That's why the partnership agreement says if the liabilities are equal, right, you have to push for them. So once I can remember, long time back, there were two partners, and actually one partner agreed to pay the full amount, but he said, okay, no, you take action against the other partner as well, both partners. Then I just want to push him for action. So we very correctly, we know that the partner is going to settle the full amount. We took action against both partners. So in front of court, he has to declare that he don't have any assets. Then the other partner agreed. So it was a dispute between those two partners. So these things can happen when the party is no more there, right? So be careful, little bit be sensible in this aspect. If you feel that the other two partners are trying to move out from the liability where they have enjoyed profits, little bit try to push them also to contribute for the same, right? Send them a letter of demand and push them to say, no, you will have to also have to settle, because you, according to your partnership agreement, all partners are equally liable. It's true that you have an asset, but that may be the asset, only asset available for the deceased partner and his family, right? So you have to be a little bit sensible in that aspect as well. Yes, anything else, Shan?
No, sir. Thank you, sir. Thank you very much.
Yeah, okay. Right. Good. What about the others? Do you all have any other questions?
Sir, can you explain that Clayton rule a little bit?
Yeah, so what happens here under the Clayton rule, what it says, first in, first out means, now on the date of the death, unfortunately, if I had the whiteboard or something, I would have explained a little bit clear, right? What happens here on the date of the, we'll say there was an OD of a partnership, right? Only OD was there. We say it's a casual OD for 300,000. Right? There were three partners. So according to the partnership agreement, all three are liable equally, right? There is a remittance which comes to the account for 150,000. So when you are trying to credit that 150,000 into that particular account, first in, right? Then automatically this, out of this 300,000, 150, it may be that 150, when the 150,000 comes into the account, that outstanding will be reduced to 150. So the deceased partner's liability will be reduced from 50,000. Right now, this will be much more will be reflected in a different way where you have other facilities as well. So when a credit comes into the account, all the debts, all the outstanding will be get settled. Now, for an example, there were other loans as well, right? Now, 300,000 came into this account, then automatically this partner will liability will be moved out. So he will not be liable further for that particular facility in future. But actually, this money came for something else. So that is why we say when there is a partnership, you have to cease. You're not supposed to pay anything out or accept any credits into that particular account. You can accept into a separate account, and until the liabilities are sorted, when the rest of the partners says, okay, this is how we are going to settle this outstanding, you're not supposed to use that money for credit liabilities or any other transaction. That's the whole idea, right? So Clayton rule very clearly says it will reduce the liability of the death partner when you're crediting amounts to the account. That's what happened, right? Any other questions? Okay.
So
Right.
that means that only the liability of debt partner will be reduced.
Yes. No, not only that, his liability will be taken out automatically, because earlier he maybe according to their partnership agreement, they can say partner A or the debt partner is liable for the overdraft facility, right? Now, when the money comes to the account, what happens? His liability will be reduced. It may be for a different transaction. The money came to the account for the total liability of the partnership. Sorry, overdraft. It was A was liable. Now, when the money comes to the account 300,000, automatically the overdraft is settled. So liability of the debt partner is no more there. So he will be freed from the total his liability of for the overdraft facility. That's what happened. So when you credit it, automatically his liability will move out. That is, it depends on, once again, that's why the partnership agreement is taken, to see how partners are liable on what basis. In certain partnerships, they say we have partners for these facilities, these partners are liable, or these facilities or Profit distribution, not on equal basis. Proportionately, 50, 25, 25. Asset contribution, capital contribution, 50, 25, 25. If they are doing any payments, A 50, B 25, C 25. So you all need to understand read the partnership agreement as well. In case, especially in case of normally when you're opening the account, you have to read the partnership agreement. But I know that you all don't have time to read the partnership agreement when you're opening the account. At least in case of a death of a partner, read the partnership agreement and understand what is there in the partnership agreement. Accordingly, you have to take action. Right? Okay, any other questions?
So in that case, for an overdrawn account, if the credits are getting, so it is from the bank of point of view, it is okay, no? I'm just
No, from the
asking.
banker's point of view, your liabilities are settled. There's no problem. But if you want to pass the now, for an example, if you want to pass the responsibility for the debt partner, you can't pass the liability. No, you can't pass him because already he has settled his all liabilities because you have credited the money. The rest of the two partners will object. So that is the issue. So if you can argue, okay, now all our outstanding are settled, no problem. If the other two partners are not objecting, then no problem. That's not an issue. So you are thinking from the bank's point of view, yes, you have got the money, but as far as the other two partners reject, if they say, okay, object to say only for this facility, so and so is liable, why do you credit and why do you reduce your liability of that partner, you are in trouble. Settle in the overdraft point of view, you're okay, you're fine. So the point is where most of the time these partners or the business community, they don't know about these rules, right? So as a result, sometimes you don't get this type of problems. But if you're doing it very theoretically and in line with the law, you have to follow. If they go to courts, you are responsible to give justifications for your action. If you can't give justifications, yes, then you will have a problem at that time. So as far as you settle everything and keep, if the partners are not making any fuss or issue, no problem. But if they keep on going to courts and contest your action, then at that time, all these rules and regulations will come into force and you have to justify your action. What you took is right. Okay, that's what happened. Okay, any other questions? No, right. Okay, now this company is formed under Act number 7 of 2007. Previously, there was Companies Act, and it was mainly based on UK and UK law. But the very recent one, or the new Companies Act, or the 7 of 2007, it's based on the New Zealand and Canadian law. The whole idea why we wanted to change the law is one reason is where the authorities wanted to have some flexibility over the or to give some more freedom for the companies to run their business. That's the whole idea of changing. And we wanted some simplified version of a Companies Act and to make directors more responsible for the action, as well as to incorporation simplified process. These were the main factors where the Companies Act wanted. And as a result, the Companies Act were changed in 2007. Parallelly, UK also changed their Companies Act. Even today, UK is also following some good principles from New Zealand and Canadian law, and where our 100% our document, I would say more than 90%, is from New Zealand and Canadian law. It's very flexible, and there are gaps in this particular Companies Act as well. But you can do better functions from this new Companies Act, as well as there are strict type of rules and regulations for the directors for them to perform their duties. Um, that was the history with regard to the Companies Act 7 of 2007. Now, if you are granting a facility to a company, how do you measure the capacity of a company? How are you going to check the capacity of a company? Yes. Yes. Can someone tell me?
Turnover, monthly turnover.
Turnover, capacity, legal capacity of a company,
Against the capital.
capital. No. Now, when you are entering into a contract, you have to have the required legal capacity. Now, under the law, who are the parties who can enter into a contract? Who has the legal capacity to enter into a contract? Yes, under any law of any country.
Legal person,
Yeah, who are these legal persons?
persons or legal entity.
Persons or legal entities. Who are these legal entities you are talking here?
It's companies.
Only the companies, legal entities. That's what I told you at the beginning. Partnerships and sole proprietorships are not legal entities. It's the companies, artificially created companies as well as the natural person, you and me, right? So, individual's legal capacity is defined from an age. We say that if you are more than 18 years, you have the legal capacity. Subject to who are the people who don't have the legal capacity? Kaushalya, who are the people who don't have the legal capacity? Kaushalya, Kaushalya, who are the people who don't have the legal capacity? Yes? Kaushalya, are you there in the classroom? Yes? Who are the people who don't have the legal capacity, Chaminda?
Minors
Okay.
and mental incapable person.
Unsound parties. Okay.
Yeah.
Yeah. Mainly minors and unsound people. Right? So those are the two categories that we say that we don't have the required legal capacity to enter into a contract. Now, and also there's another category. I missed that point. Drunken people, right? Drunken people also, they don't have the capacity. Minors, unsound people, and the drunken people, right? So those three categories we exclude from the legal capacity, or they don't have. We consider those three parties don't have the legal capacity. So now, when you come to companies' legal capacity, how are you going to check? How are you going to check the legal capacity of a company? Nuani? How are you going to check the legal capacity of a company? Nuani? Yes. You need to check the articles and see whether there are any restrictions for capacity, borrowing capacity. Now, earlier, now do you all take this intravirus certificates? Chaminda, do you all take these intravirus certificates? I mean, for facilities of companies, do you take intravirus certificates?
No, sir. To be honest, I have not seen anything as such.
Yeah. Chaminda, what's your experience over that? Intravirus certificates?
No, sir, I don't have any idea about that.
Yeah. So intravirus means there are two opposite is ultravirus. Intravirus means the directors are performing within the given authority of the by the shareholders in line with the articles. Ultra vires means you are performing the duties beyond your given authority. Now, before these companies act came, the bankers were used to take intravirus documents from each and every director. So if I'm a director, I have to give under personal capacity, not on the letterhead of a company, in a blank sheet to say, we as director, I'm so and so, director of this company, we have not exceeded the authority given by the articles. Right? But now, unfortunately, the bankers are not taking this document. Why they say now there is no objective clause. Memorandum is no more there. Earlier, there were memorandum and articles of association. So memorandum will give you the objective clause. Now, today when you form a company, you can do anything other than the illegal businesses. But if you want to get the license for a specific business, you have to get license as well. So the point is where now, since the objective clause is no more there, bankers think there is no requirement of intravenous certificate. Now, how do you know whether the objective clause or the memorandum is no more there, but there can be objectives in the articles? Now, you don't have though the memorandum is no more there, if you want, you can have objectives to the company. Those objectives will be there in the articles. So how do you know, right, whether there are no objectives in that particular company? So unfortunately, now the bankers are not taking these intravenous certificates. First thing what you have to do is you have to see whether there are any objects or not. If there are no objects only, you can avoid this intravenous certificate. If not, you have to get the intravenous certificate as well. So that's a call that you all have to take. If the process says no, you don't have to take, that's fine. But this is the logic that I have understand. Always the article will provide provisions, the limitations of directors. So if the articles have not, it comes from the objects. If there is no object clause, then there is no restriction, then there is no requirement of intravenous. So the whole idea of this new Companies Act, Nada viewers, when you're forming a company, you should have to have flexibility of doing business. Now, if I form a company to imports, I should be able to do exports. Otherwise, what will happen if I want to start exports? I have to go back to the shareholders and get their consent, which is a little bit tough, right? But today, when you form a company after this 7 of 2007, you can do any business. But if you want to do a business which require license, you have to get special license for those businesses. Other than that, you can do any business today. Import, export, trading, buying and selling, anything, no restrictions. But if you want to do a specialized business which are in line with the which you require license, for those businesses you have to get approval from the respective authorities as well. Okay, any questions? So you need to check the articles and see whether there are any uh, any clauses which restrict the transactions as an objective. If so, you need to study that and see how you can accommodate that customer. Right. Company as a separate legal person entity. So what you have to understand is where now what happens in case of a company, if the directors are not, if the company can't pay, who will have to pay that liability? Who will have to pay that money? Yes. If the company can't pay, who will have to pay that? Nuvani, who will have to pay? If the company assets are not.
Shareholders.
You're sure? Shareholders have to pay. Yes. Different answers.
Depending on the security that we have obtained, Mr. Jagannath?
Security. If you have not obtained any security?
We'll have to go back to the, let's say, the shareholders or the owners.
Shareholders or the owners. Right. Any different answers?
The directors have given personal liability, they are liable. If not, shareholders are not liable.
If the directors have not given personal liability, personal
Uh,
guarantees,
then they are not liable.
so then what happens to the liability?
Liability can be passed, should be bear by the bank.
Yes, you have to bear the loss, right? So the point is where if you have taken a security, you can use that security. If you have not taken a security, if there's no adequate assets, you will become unsecured creditor, you will not get a single cent. You can't make directors liable, you can't make shareholders liable, because we consider them as separate legal entity. Director, company, two different legal persons. Shareholder, company, two different legal persons. But if a director or a shareholder has given a undertaking or signed a guarantee that he is liable for the debts of the company, yes, you can make them liable. But if you don't have adequate assets in that particular company, you have to write off your liability and you will not get a single cent. Right? I will show you a chart when I'm doing the documentation side, then you will get a better picture. So unfortunately, sometimes the bankers, they think, okay, when it comes to sole proprietorship, they can recover from the sole proprietor. When you come to partnership, they can recover from the partners. Sole proprietorships and partnerships, the point is right. You have an view to say direct sole proprietors and partners are personally liable. But when you come to company, we say it's a separate legal entity. So you will not be able to get anything from the company. But in case of a sole proprietorship as well as the partnerships, if the partners or the sole proprietor says we are bankrupt, what happened to your liability? Who is going to pay? Finally, you have to write off from your books, right? You will not be able to get anything from the partners. Partners going to say declare that we are bankrupt. That's it. Right? So this is the danger that we see when you come to lending, especially with regard to companies. The company assets are inadequate, or if there's no adequate assets to settle all the liabilities, they can or you will have to bear the loss. Any questions? Sean, any questions? No?
So, if a part, if there is a loss in a partnership, the if partners declare they can't afford the loss, and the facility has been given in an unsecured basis, how we gonna settle the deals?
You have given a facility to a partnership, right? Unsecured. So finally, it's the partners are liable, right? Because the partners are the legal persons. So you have given 3 million, three partners, no security. We say you have taken a guarantee, personal guarantee of the partners. Now, if all three partners says that we are bankrupt, we don't have any assets, what happens to the bank? We'll have to bear the loss. Though we say that the partners are personally liable for the partnership facility, that's the point that I raised earlier. If the partners declare that they are bankrupt, they go to courts and they declare we are bankrupt. So then you can't get anything from them. They're bankrupt. So then you have to shut down your account with that particular customer and write off from your books. That's what happened. Okay, Sean? So
Yes, sir. Thank you. Thank you
theoretically,
very much.
it's easy for us to say the partners are personally liable, but whether the partners can afford that money is the question. The partner says we are bankrupt and we can't afford this money. That's the end of the story. No point of arguing. You will not be able to get a single cent from them, right? That's what happened.
Mistakenly, if we have not obtained a joint and several guarantee, the scenario is same or not?
It's the same. Whether you have taken a joint and several guarantee or not, right? Scenario is same. If they prove that they can't pay they don't have money to pay and they are bankrupt, situation is the same. We'll forget about a partnership. You have given a facility for X against my personal guarantee, and X says I can't pay. You go behind me and collect. If I declare in courts to say I'm bankrupt, you will not be able to get anything from me as well. So this bankruptcy will applicable for anyone. If any person says, individuals say I'm bankrupt in front of courts, you have to prove certain things. The courts prove that I'm a bankrupt person. That's the end of the story. You can't get any single cent from me. Right? Any other questions?
Sir, how we going to measure the bankruptcy, sir? Suppose I have
You had,
all my monies under my wife's name, and I
yeah,
say I am bankrupt. Is there any
yeah.
legal proceedings to get that money?
Yeah. You have to file. You have to declare your bankruptcy in the court of law, and the courts must declare you as a bankrupt person. You have to prove in the front of courts. If the court is going to establish that you are a bankrupt person, that's it. Maybe that spouse is having assets and so many other things that you have transfer all your assets to someone else. So if the courts declare, then you have to go to higher courts and say, look here, this person is not bankrupt. He has done these transactions. Then if so, you can get a reverse on that. Other than that, bankruptcy, I can't just declare. I have to go to courts and prove. So court is not just declaring a person as bankrupt. When you come to, if I'm going to declare me as bankrupt, it's the end of my entire career. My business, no one will take me hereafter because I'm a no court declared bankrupt person. That's it, right? So there is a process. You can't just prove, and the court will go through the entire process and they will study and they will give the bankruptcy. So if you have any other sources of information to say that he is not bankrupt, then you have to appeal to high courts and proceed. Say that he is not bankrupt and he is just giving wrong information to the courts. It's possible, right? Sandor? Sorry, Shan. Shan, which bank you are working for?
For commercial bank,
Okay. What is your department?
credit
Operations.
department, sir. Credit.
What is your experience at the credit department?
Nearly 4 years.
Altogether in the bank?
8 years.
What are the areas that you have covered and currently in which now when you come to credit, is it branch credit or the corporate credit?
Corporate credit.
Okay. Earlier you were attached to a branch.
I was at Vata branch.
Okay. When you come to corporate, you are talking about the you have different divisions, no? Medium and
Yes.
large corporates. You are talking about the large corporates, handling the
Yes.
large corporates.
No.
Okay.
Medium corporates.
Medium corporates, right? Okay. Good set of questions. Right. Anything else from the others? So that is the interaction that I'm expecting from you all to ask your questions. No point of just logging in. I don't know whether you all are just to mark attendance. If you are logging, there's no point. And I prefer for you all to interact and ask your questions and clear your things, because finally when you clear things only you can do a good job for your organization. Otherwise, just logging into a system and behind the screen, if you're not getting anything out of these programs, no point. Okay, right. Going back to the topic. So these are the recognized companies under the Companies Act 7 of 2007. You get limited companies, unlimited offshore and overseas companies. Limited, you have public, private, limited by shares and limited by guarantee, right? And you get unlimited companies offshore and overseas. Now limited means your liability is limited to the amount that you have invested in the company. Your liability is no more there. If you purchase 100,000 shares in a company, if that company is going to crash, you're losing 100,000. That's it, nothing more than that, right? At the same time, unlimited means your liability is unlimited. Whether the company have assets or not, you're personally liable. It's almost like a sole proprietorship and partnership. So though there are provisions to form unlimited liability companies, I don't think in a business perspective, it's prudent to form unlimited liability company. Better you form a partnership or a sole proprietorship, right? Because finally, the whole idea of forming a limited liability company is to limit your liability. Now you form a company to unlimit your liability. What's the purpose? No purpose, and top of that, you will have a lot of responsibilities when you form a company. ROC responsibilities are very high. So you don't get anything out of that if you form a unlimited liability company, right? And top of that, you will have offshore. Offshore means uh, companies which are formed. We'll say a company which is formed in Sri Lanka, offshore company, they can't do business in Sri Lanka, but they can do business any other country, right? So offshore means you have formed a company, and the registered country you can't do business. You can do business in any other country. So India, if a offshore company is formed in India, you can't do business in India, but you can do any other country. Overseas banks, overseas companies, where you have a branch. Now, if you take HSBC, is an overseas one. They have formed in a different country and they do business in that country as well as any other country. So when you come to, but all these companies, they have to ensure that they register at the register of companies. Earlier, there was no requirement for this sum of the companies, especially the overseas companies, for them to register under the Sri Lankan law. But now they have a responsibility to register under the Sri Lankan law. Now, when you come to limited companies, you have public, private, limited by shares, limited by guarantee. So limited by shares means your liability is limited to the amount what you have invested in the company. Limited by guarantee means in those companies, there's an extra liability given. Extra guarantee given. Now, if I'm a shareholder of a limited guarantee company, in addition to my share investment, I'm going to give an undertaking to say, in case if the company is going to close down, I'm going to accept 5 million worth of liabilities. So if X, there's another day the shareholder says, I'm going to consider another 5 million. So both of us are liable for another, in addition to our shares, another 10 million liabilities upon the liabilities of the company, right? So it's a comfort for the investors. Sorry, it's a comfort for the creditors, right? It's a comfort for the creditors because creditors know if there's no adequate assets in the company to settle their liabilities, they can come behind both of us and recover up to 10 million rupees. So those are called limited guarantee, and you get the private company and you get the public company. Private means small entities, single shareholder company, 2-3 shareholders with few directors. Public means where I have taken money from all of you all, you are public. And public listed means the companies which are listed in the Colombo Stock Exchange. So these are the companies, the nature of companies that we see in Sri Lankan context. Any of these companies you can form while fulfilling the requirement. Any questions on that? Yes. Right. Now, when you come to company, who may sign? Method of typing. Now, who can sign in the case of a company? Yes. Can someone tell me? Rasika, can you tell me who have to sign in case of a company? Rasika?
The director.
Directors. Okay. How do you know who is authorized to sign? How do you know who is authorized to sign? Now, in case of we'll say in case of a check, who has to sign? In case of a loan document, who has to sign? Any idea, Rasika? Sean, can you add something on that? In case of a loan, who have to sign? In case of a company, in case of a check, who has to sign?
Normally, directors can sign upon on the instruction they have given under resolution, and they can appoint authorized persons other than directors to sign on behalf of the company.
You're talking about checks or you're talking about the documents? In case of
I'm
checks, in
talking
case of
about
checks.
checks.
Okay.
I'm talking about checks, but in security documentation, directors have to sign upon their instructions given by under resolution.
Yeah. So more correctly, it would be in case of an account, they can't authorize any person, either directors or they can appoint any person to sign. It can be the finance manager, it can be the marketing manager, or any person. But when you come to documentation, you have to check the articles and see who is permitted to sign, right? If the article says under the common seal, 2 directors, or director and secretary, or chairman and the director, or chairman and the secretary, you have to follow those steps. If the articles are silent, um, and if there are provisions to appoint authorized signatories, based on the authorized signatories, you can obtain the documentation for secret documents as well. But more prudent practice is where to obtain signatures from the directors or director and secretary for documentation, and for opening transacting of accounts, either that goes with the instructions. Now, do you all use this common seal today? What is the uh, application of common seals today? What is common seal and what do you all use? Amir, what's your view about this common seal? Do you all use this common seal today?
So, in the inception, when we are executing the
Okay.
security documentation, yes, we do use the common seal.
Okay. What do you mean by in the inception means when?
Yeah, and when the customer is onboarding for a facility, we do,
Okay.
and then after 1 year's time, when we are reviewing the facility again, we execute a letter of offer. No, so then also we do.
Yeah. Okay. So simply, do you take the common seal? What is common seal? This common seal of a company. There are 2 different types: common seal and a rubber stamp. You sometimes use common seal, you say the embossed seal. What is this embossed seal or the common seal?
It is the seal that has to be franked in the paper, isn't it? The with the iron
Okay.
kind of thing.
Okay. Okay. So what's that actually? What are now, when you place that particular seal, there are 2 directors or director and secretary must sign. So what are they doing actually? This common seal is the signature of the company. That's a signature. So these 2 directors or the director and secretary, what they do is they are witnessing it. So they confirm in my presence this seal was placed. But unfortunately, sometimes the banks, they say now the common seal is not required and therefore we are not taking the common seal. So as a result, 2 directors or director and secretary or any authorized person will sign. Now, how do you know whether they don't have the common seal is not required or not? That is something that you all need to check. Shan, do you all check? How do you know whether the common seal is used or not?
We have to check the articles of association. If
You have to
it's
check that.
silent, we have to take and confirmation from the directors that we don't use common seal.
Right, right. Yes. So if the article says common seal is a must in presence of 2 directors or director and secretary, you have to say, get the signatures in line with that. if the articles are silent. So the argument is, if the articles are silent, you can't say that it's not required. If the articles are silent, you have to get a confirmation from the board, pass a resolution to say they are not using the common seal for any of the transaction. Instead of that, either the two directors are signed without the seal, or director and secretary signing without the seal, or so and so is authorized. So don't just say the new Companies Act have taken this requirement out, therefore we are not taking it. No, that is not the right approach. You have to check the articles and see whether this requirement is still there or not for that particular company. So ours is formed in 1987. But even for all the transactions, today we use the common seal in the presence of two directors or director and secretary. At the same time, for certain transaction, we have delegated authority. So all three lines are there in that. Delegated, common seal with two directors, common seal with two director and secretary. So just jump and say no under the new companies that there is no requirement of obtaining the common seal. It's a requirement, but requirement you have to justify, you have to check and see whether there are provisions in the articles to move out from this requirement, or how the article is going to define obtaining signatures. So based on that, you have to get the approval. You have to get the signatures on the company. So signing can be two directors, director, secretary, under the common seal, or with the common seal, or without the common seal, or delegated person. Right? Any questions? So method of typing: AB Private Limited, a company duly incorporated under the Companies Act of 17 of 1982 and re-registered under 7 of 2007 of Sri Lanka, bearing the registration number and having its registered office at this place. So if you are writing a document, if you are writing anything with regard to a company, you have to ensure that you include all these requirements. Right? Don't. Can you address an offer letter in the name of a company? Can you address an offer letter in the name of a company? Yes. Can you issue an offer letter in the name of the company?
Yes.
Yes. Why? We consider that as a legal person.
Legal person.
So,
Yes.
yeah. Therefore, you can, but not in the case of partnership or a sole proprietorship, which you cannot do. Okay. Right. Any other questions? Right. Then we'll have a break and continue. It's 3:15. 25 minutes break. Come back by 3:40. Right. Now, now what is a board resolution? Now, when you're opening an account, you get some documents. One of the important document is a board resolution. What do you mean by a board resolution? Can someone tell me? Kaushalya, are you okay with your connections? Are you in a position to talk? Kaushalya? Kaushalya, are you in a position to talk? Right. Dennis, can you? Okay. Dennis, what do you mean by a resolution? Board resolution?
All the operation instructions mentioned in the resolution.
Okay. Okay. Who should sign a resolution? On behalf of the company, who should sign a resolution?
The directors and the company secretary.
Do you have to have the common seal for that? Yes. Do you have to have the common seal for that? Yes.
Yes.
Okay. Sean, anything that you can add on that? Obtaining a resolution?
No, sir. All are correct. I agree with him.
Okay, so resolution is the board decision of the company. So it says on such and such a day, the board of directors of this company decided to open an account with commercial bank Vattala branch. There are certain basic requirements. It has to be on an original letterhead, not on a photocopy, and you can't have any tipex on that. It has to be tipex free document. Normally, and it's an extract of a decision. Normally, an extract can be issued by a company secretary, but the banking practice, it has to be signed by two parties. So it can be a director, or sorry, it can be two directors or director and secretary. Using this common seal is not a must. It's not required. Not a must. No, not. It's not required at all. So because it's a decision, extract of a decision, you have to use this common seal in case if you're signing a loan agreement, because it's a signature, right? So since it's issued as an extract, there is no requirement of a common seal when you're when you're obtaining an extract of a company decision. So those are the main features, but you have to ensure that you have the basic requirements for you to take the call or the decision, or that particular board of directors must ensure that they have taken a proper decision for you to form a contract with them, right? So those are the features that you all should know, right? Okay. Now these are the terms that we use to identify the companies. If it is a listed entity, it has to be entered with public limited company or PLC. Other limited company are either limited or LTD. Private companies, private or PVT. So depending on the second part of the company name, you can decide whether it's a listed entity, public unlisted, or a private entity. Now limited means it's all about limited by shares. Your maximum liability is limited to the amount that you have invested in the company, right? So I have explained these principles. I'm not going to discuss what is a limited by shares guarantee private company. So when you come to a private company offering shares, private companies can't issue shares to the public. Limit to a number of its shareholders to 50, nothing more than that. Top of that, you will have the single shareholder company, right? Public company that has issued shares to the public. So if I'm issuing shares to all of you in the classroom, it's a public company. But if I want to list my company in the stock exchange while fulfilling the listed entity requirements, I can list my company in the Colombo Stock Exchange. So we have around 300 odd companies listed. Unfortunately, because of this current situation, the market is not properly functioning. Our market is very small comparing to UK. They have huge numbers, but here we have a small number. Our market is small. If you compare with the Asian region, Bangladesh and Pakistan, they have a better listed controls, listed regime. Unfortunately, we had plans in 2015 to demutualize our stock exchange. That means that Colombo Stock Exchange is currently it's a guaranteed company. They wanted to convert into a listed company where the stock exchange was going to issue shares to the public. So you can purchase shares from the Colombo Stock Exchange and become a shareholder. Unfortunately, due to our political uncertainty, nothing to do with COVID, it started 2014. 15, I would say, when the previous regime came, but they could continue because of this political uncertainty and power-based thinking. Even now, We have failed to do that. Without demutualization, we can't grow our market. And they had a plan, even the foreign shares to be listed in the Colombo stock market. But unfortunately, nothing happened. So if they demutualize next step, even foreign shares, I don't know how whether those companies will willing to list their shares in the local market. But if they are willing, even Google shares or even Apple shares will trade in Sri Lankan context. But we don't know how much it will cost and what are the restrictions that we will have in purchasing and trading shares in the local market. So that's the stock market of Sri Lanka. There are a lot of opportunities in the market, but if anyone who is dealing with shares, anyone who is dealing with shares, anyone who has experience, Dennis?
No, I'm not dealing with shares.
Yes. What about the others? Sean, you're into trading? No?
No, sir. No.
Okay. Right. So the point is where you have to be a little bit careful when you are trading. If you have a good stockbroker, yes, you can earn money, but you have to have limits. Uh, Unfortunately, it's human beings. When you get 1,000 rupees, you want to make it 2,000, and finally you lose the 1,000 as well. So that's what happened, and little bit tricky. Market is not moving 100% based on fundamentals. It is a manipulation part as well. So if you are purchasing, you have to be a little bit careful on that aspect. Okay. Any questions? So the offshore I explained, unlimited I explained, overseas I explained. Now these are certain set of documents that you have to obtain at the point of opening an account or at the point of opening an account as well as at the point of forming a company, right? So if you want to form a private company, you have to have form number 1, that is a registration form, certificate of incorporation, form number 2A, list of directors, form number 20, registered address, form number 30, right? If the company has changed its registered address from 13 and the directors 20, so if there are any changes, you need to file another form 13, and if the directors have changed, it's form number 20. Same set of forms should obtain from the unlimited company with a share capital. So the point is where you have certain set of standard set of documents which you have to file, and you have to get the registration. The registration depends on the type of company, right? Um, Number of the registration certificate depends on the company, and these are the documents that you have to obtain for a public company. So I'm not going to go in detail. As a guideline I gave you. So when you are dealing with a company, please make sure, depending on the type of the company, you have to get the required document. Offshore company, these are the forms, right? Overseas company, these are the forms. New incorporation forms, depending on the type of the incorporation or the company, you have to get different forms. These are the forms that you have to get. In case of a private company, it's 2A, unlimited 2B, limited 2C, public 2C, company limited by guarantee 2D, offshore 2E, application for re-registration form number 40, certificate of incorporation for re-registration 41, certificate of registration of overseas 42. So today you can't have any unregistered company in Sri Lanka, or all companies should be either re-registered or obtain registration in fresh if you're a new company. So if a company says that we have only form number 40, we don't have the form number 41, it clearly shows that they have not re-registered, and those companies are not existing at all. So be careful. Really recently, I heard that a company have come for a facility, and they were talking about form 40. They say that they have not received form number 41. So if you don't have the form number 41, it says you have not re-registered. Re-registered companies are now no more existing. If I'm not mistaken, they gave a period for all the companies to re-register. That is in 2007 latter part. So if the company, and further they had an extension due to practical reasons. By 2008, all the companies have to be re-registered. So if you have a company today in your portfolio where they have not re-registered, that means that that company is not existing. Don't proceed any transaction with such companies. Okay, any questions on that? That is an alarming part. You have to be careful on that. Any questions?
So what is the difference between private and limited company?
Private and limited, there is limited. Private means a small company. Limited, it's a most probably it's a family owned business. Limited means I have issued shares to all of you. You all are outsiders. Listed means I have issued shares to the entire public, entire Sri Lankans. Right? So limited is I have issued shares to the public, but it's limited, not for everyone. It can be a limited number. Private means most probably it's a family-owned business. Yeah, father, mother, children, sons and daughters will be there, right? It's a small entity. Public is little bit much more bigger, where I have issued shares to outsiders. Family, it's within the family. Public, outsiders. So if I form a company, all of us form a company, and you all are public, but we are not listed. When you fulfill the requirement of the listing rules, only you will become a listed entity. Okay. Anything else? So this form number 10 is important if you are creating a charge at the register of companies. Now, what do you all create charges at the register of companies? What is the why we want to create a charge at the register of companies? Anyone who is into credit side can you tell me what's the purpose of creating a charge? What is a charge and why you want to create a charge? Yes. Can someone tell me? Yes. Dennis, can you add anything on that? What do you mean by a charge? What are the restrictions on creating a charge?
In case of buying of a company, the bankers so the in that we have a claim on that, so certain assets we have registered.
Okay. So at which point you take the decision to create a charge? For what type of organizations? Is it for sole proprietorship partnerships or it's for companies?
For companies, within 14 days, I think it should be registered after executing the mortgage.
Is it against the company asset or is it against any asset of a company? Now if you're giving a facility to a company, do you have to create the charge or are there any restrictions over that?
Particular asset we are charging.
Yeah, so the requirement is where if you're giving a facility to a company against a company asset, right? You're mortgaging a company asset. You have to create the charge at the register of companies within 21 working days. This is purely to get priority over the transaction. So if you register within 21 working days, you are considered as a secured creditor. Otherwise, you will become an unsecured creditor, right? And at the point of liquidation, you will get priority over the others if you have created your charge at the register of companies. If you don't register your charge, you will consider as an unsecured creditor, right? So this is only for the company assets, not for any other, not for all the facilities for the company. So it has to be only for the company facilities against the company assets. So if you have given a facility against a director's personal asset, you don't have to create a charge. So there is a restriction. And if you fail to file within 21 working days, you will not be able to get the priority. If so, you have to file another action in court of law, get the consent of the courts, and after that you have to re-register or register your charge. If not, you have to settle the facility and you have to re-grant the facility as a fresh facility. So those are the restrictions. So be careful when you are more giving a facility to a company, and if you have not and also if you have obtained a company asset, right, you need to create charge within the 21 working days. Any questions on that? So this creating a charge, you have to file form number 10. I think to my knowledge it's 7,500 plus 15%. But are there any, have these charges have changed? Have these charges have changed? Any idea? Recently I have not done any transactions, because of that I don't know whether this 7,500 plus the VAT is right. Sean, what is your experience since you are handling corporate clients?
It's correct, sir.
It's correct, right?
It's
So
correct.
this was there
7,500
for
plus 8% VAT. Yes.
8% VAT. Okay, all right. Thank you. So it's a huge amount. Now what happens if you give a facility against a company fixed deposit? Do you create the charge, or do you create a charge for a cash build-up? Yes, Sampath? Company's cash build-up or company's fixed deposit, do you create a charge? Yes, Sampath?
No,
Sorry?
no, sir, we do not create.
No, not create. Sandhya? Sandhya?
Not create, sir.
Okay. Shan, what's your view? You have to
No,
create?
sir. No, we do not create.
Right. Normally you have to create, actually. It's a company asset, right? So if in case of a fixed deposit, you have to create the charge against the lien. Sorry, you have a lien, right? So set off will be the document which we have to forward to the register of companies, because it's a company asset finally. Cash build-up is also a company asset. So be careful on that aspect, because sometimes they might have huge, large fixed deposits where you have kept as under lien, and those are not secured if you have not created the charge. So please recheck the requirement and see whether they whether you all don't have that particular process, or you all are not following that particular process. To my knowledge, we have to create a charge against the fixed deposit. So since the deposit or a set, in case of a cash build-up, we create a set off, and the set off has to be lodged at the ROC within 21 working days, right? So one can argue how even fixed deposit, of course, fine. How can you create a charge for a fixed cash build-up? So that's a practical thing that you all have to sort out and handle it, because it can be monthly the company is saving 100,000 each. So for are we supposed to file each and every 100,000 a charge is the question. So for if you're going to file a charge for each and every 100,000, there is a cost involving 7,500 plus 8% VAT, right? So for that other than that practical issue, you will have to take a call how frequently you're going to create the charge. But if you're trying to claim in case of a liquidation process, if you want to become a secured creditor, definitely you have to create the charge. Okay, that's a practical issue. But fixed deposit, no problem, you can create the charge. Any questions?
Sir, what if we can't register the charge within 21 days?
So then you will not get priority, right? So you will not be able to get the priority. Then you will be considered as unsecured creditor. There are two options. you have to settle the facility and re-grant the facility and send a fresh charge within 21 working days. If not, you have to file a case in the courts, get the court permission, and file your charge. So if you can give the reasons, valid reasons, why you couldn't create the charge within 21 working days, it can be the COVID or whatever. Court will give you, it's a one-way order. There is no one is going to contest on that. So you are explaining your position and court will give you a direction. Those are the two options available in case if you fail to file within 21 working days. Right. Please ask questions if you all have. Don't wait till I am going to ask questions whether you have a question or not. Right. The whole idea is to share your views and ideas. Nothing more than that. Right. If you all want, you can speak in Sinhala as well. That's not a problem. මොන හරි අහන්න තියෙනවා නම් ඕන එකක් අහන්න. ඒක කිසි ගැටලුවක් නැහැ. මොකද ඔයගොල්ලෝගේ තියෙන ප්‍රශ්න ටික निराකරණය කරගෙන යන එක තමයි ගොඩක් වැදගත්. මගේ මේ ස්ලයිඩ්ස් ටික ඉවර කරනවට වැඩිය. හරි ඒක නිසා මේ ලැන්ග්වේජ් එක බැරි එකක් කරගන්න එපා ප්‍රශ්න අහන්න. right we are all Sri Lankans. අපි එහෙම මේ අපි perfect English කවුරුත් අපි දන්නේ නැහැ. ඒක අපි හැමෝම තේරුම් ගන්න ඕනේ. ඒකින්ද කිසි ගැටලුවක් නැහැ. ඔයගොල්ලෝ මේ ඉංග්‍රීසියෙන් හරි සිංහලෙන් හරි දෙමළ නම් මම දන්නේ නැහැ. ඒකින්ද ඒ ලැන්ග්වේජස් දෙකෙන් අහුවට මට ප්‍රශ්නයක් නැහැ. හරි. තියෙන ප්‍රශ්න විසඳ ගන්න. ඒවා කැරි ෆෝවර්ඩ් කරගෙන යන්න එපා. එතන කවුරුත් ඩිස්ක්‍රිමිනේට් කරන්න, එතන කවුරුත් එක එක්කෙනාගේ knowledge එක ටෙස්ට් කරන්න මෙතන ෆෝරම් එකක් නෙමෙයි. එතන හැමෝම ඉගෙන ගන්නවා. ඔයගොල්ලෝ කියන දේවල් වලින් මම ඉගෙන ගන්නවා. මගේ දන්න limited knowledge එකේ මම ඔයගොල්ලන්ට උගන්වනවා. ඒකින්ද කිසි ප්‍රශ්නයක් නැහැ. ඔයගොල්ලන්ට කැමති ලැන්ග්වේජ් එකකින් ප්‍රශ්නයක් අහන්න පුළුවන්. සමහර විට ඔයගොල්ලන්ට ප්‍රශ්න තියෙනවා. මට තේරෙනවා ඔයගොල්ලන්ට ප්‍රශ්න තියෙනවා කියලා. ඔයගොල්ලෝ ප්‍රශ්න අහන්නේ නැහැ. එකක් සමහර විට ඔයගොල්ලෝ හිතන්න පුළුවන් අපේ වැරදි ප්‍රැක්ටිස් එක how way කියලා. කවුරුත් එතන කම්පිටිෂන් එකක් නැහැ. When you come to business, unfortunately banks are fighting each other. When you come to knowledge, there is no fight. හරි. ඒතකොට අපි හැමෝම හරි දේ දැනගත්තොත් තමයි මේ ඉන්ඩස්ට්‍රි එක අපිට ඉස්සරහට ගන්න පුළුවන්. quality banking කියන එක ඉන්ඩස්ට්‍රි එකට ගන්න පුළුවන් අපි හරි දෙයක් කරොත් විතරයි. ඒක නිසා මේ එක්ස් බැංකුවේ හරි දේ හෝ වැරදි දේ හෝ මම ගිහිල්ලා තැනකක්වත් කියන එකක්වත් ඔයගොල්ලෝ ගිහිල්ලා කතා කරන එකකුත් මෙතන වෙන්නේ නැහැ. ඒකින්ද ඔයගොල්ලෝගේ මොන හරි ප්‍රශ්න තියෙනවා නම් මේ ඒක හදාගමු. වැරදි දේවල් වෙන්නේ නැති ඉස්සරහා හැමෝත් හෙටින් නම් වැරදි කරන්න ඕනේ නැහැ අපි. වැරද්දක් කරා කියලා ඒක සදාකාලික වැරද්දක් වෙන්නේ නැහනේ. ඒක හදාගන්න. ඒක නිසා මොන හරි ප්‍රශ්නයක් තියෙනවා නම් අහන්න ඕනලාක I'm ready to answer with my limited knowledge. Right. තියෙනවද ප්‍රශ්න?
Sir, what is the procedure if the facility is granted against the security received with their common shares?
Security receipt with their common shares. Can you little bit explain that particular point? Now,
That is
can you take an example and tell me? Now, I'm a company. Okay, I'm a company. I want a facility from your company, right?
From the bank received the collateral, their common shares, listed shares.
Common shares means my company shares I'm
Yes.
going to mortgage
Yes.
with you.
Yes,
Okay, right? And obtain a facility.
yes,
Take a facility එකක් දෙන්න බෑ. My own shares you can't mortgage because the problem is where if my company is going to crash, what I may be a listed entity, right? But my own share means what happens if I'm going to go for a bankruptcy? What happened to my share price? මොකද වෙන්නේ නුවනේ?
if the prices are, the mortgage will not be there. Actually, if the prices
Yeah, the prices
are
will be
crashed.
zero. Yeah, prices will be zero. So you want you gave me a loan and you want an asset-backed loan. No, you want an asset. So what happens if I'm going to give you an asset at the end of the day if there is no value for that asset? So you can't give me any facility against my own company shares, but you can give me a facility if I have any other company shares. Because otherwise you are doubling your risk. Why you want to take a security is to avoid the risk. Here, what you are doing is you are giving me a facility, and to back that particular facility, you are taking my own company shares. So if the company is going to crash, the value of the security will be zero. In the
Is
water,
there any legal prohibition of giving such a facility?
I'm not sure about a legal provision, but it's the common sense aspect. Now, when you come to bankers, we have two principles. One is the practice of law, and the other one is the legal principles of law, right? So, from the practice, we have adapted certain principles. Now, that has become the law. So, it's a common sense type of approach. Why we want when you are giving a facility, you want a security. That means you have to have some value asset for that particular facility. Now, always understanding is where the value of this asset should increase. Now, when you take my company shares, okay, the asset will increase. But what happens in case of insolvent liquidation, my asset value of the asset is going to go zero. So I would say, I'm not sure about a legal principle, but it's a common sense aspect. We normally we don't encourage that, and not in the sense we don't encourage, not we don't take it because you can't take it. It's against the all banks principles, because I don't think even the central bank will allow you, because central bank they have given some assets list of securities in 2005. It's there in their red color rule book. So if you are giving any facility to a customer, they have listed the types of securities that you can obtain from the customers. All those securities are approved by the monetary board. So if you go and check then in that particular list, if this is not there, it's a law applicable for this. So they have given a list of securities that the banks can obtain. That is in 2005. That's what recently when I checked with the central bank, that's what they told. We wanted to ensure whether party, now we always they say when you come to related party, they always say the monetary board approved securities. So we wanted to see what is this monetary board approved securities, and they referred back us to 2005. There was a list in the direction, one of the directions on this, right? Okay, any other questions? No. Right. So these are set of forms that I have highlighted. Just go through those forms. So if there's any change in the registered address only, you will get the updated form 13, and form 20 any addition to the directors. Now when you want to obtain these forms, how do you get the copies? Now if my company is formed in 2010, and if I produce you a set of original copies which I have received at that time, can you open an account tomorrow for me? Yes, can you open an account for me tomorrow? How do you get update these documents? Chaturanga? What is the process of getting update these documents? Dennis, any idea? Dennis?
No, sir.
Right. Sean? Now I told you when you come to form sole proprietorship registration and partnership, you have to get updated from the register of divisional secretariat. But when you come to company documentation, what is the process? Sean?
Like the annual return.
We can accept as it is.
As it is. Okay. Sampath, what do you mean by annual return?
Usually the company register issue once a year, change person.
Yeah. So, okay, annual return is fine. Normally you have to annually update this annual return form, but in between, so you have to wait for a whole year to get the annual return, right? After the annual general meeting only you will get that document. So in between, anything changes can happen. Any new directors can come, directors can leave, they can change the address. So my advice is, where the correct practice, before you execute a mortgage, you have to get the updated documents, especially form number 20 and the registered address, right? That's form number 13, from the register of companies. The register of companies will issue certified copies. You'll have to ensure that you have certified copies issued by the register of companies, updated copies, right? Those cannot be certified by the company secretary because it has to get updated. I'm not sure whether that is happening today, right now. People's Bank, I can remember, they had a very good practice. Those days, before they execute a mortgage, on the day of the mortgage, execution of the mortgage, they used to check the register of company books and see whether the same parties are there. So I can negotiate with you, and all of a sudden on the date of signing the documents, a few people will resign. So then your entire documentation will wrong. So they had that very good practice. It's a very good practice because any moment anything can happen. In the morning I can give you my registered address as this, in the evening I can change it. So unless you have an updated copy, you can't act as a CID officer. I'm not expecting you to act as a CID officer and try to do transaction. It's not practical. But still, we have to be vigilant on this, always without negligence and with due care. If you want, when you come to payment of checks, if you don't prove that you have acted without negligence and with due care, you will not get the protections under section 82, 83. You're not protected. So similarly, bankers means a group of people always playing with other people's money. So in such an instances, you have to be very careful. You have to ensure that you take the proper action beyond the rules. So it's almost common sense. So please make sure that you can't open an account for old documents. You have to get updated as much as possible, and based on those documents only you can open the account. Right, any questions? Sorry. Sorry. Not clear, Sampath.
Form 20 and 30.
Form 13, yes.
And 20 I issued, when there is changes only, without changes they won't issue.
No. Yes, if there's no changes, you can't get an updated version. Only the form number 1 will be there. So when you are opening the company, you have to you will get the form number 1, where you will have to include the not only form 13, it's a form 20 is also the same. So you have to ensure you need to get a resolution from the company. If they says there is no form 13 or form 20, you get a resolution from the company saying that they have not changed any directors, the same old directors are there, as well as no change in the business address. So that's fine. So if you have changes, only 13 and 20 will come. If there's no changes, no, you don't have to update. There's nothing for you to update actually. But still, if you don't know the customer well, you need to get a resolution. Better to get a resolution. Otherwise, you might wonder. Sometimes you can request, then the business might. Now, normally, especially when the legal asks certain documents, business always say that legal is not supporting because of the competition among the business. But it's prudent. I would use the word prudent to get confirmation required documents in advance. If they say we don't have, let them have a board resolution to that effect and say, no, we have not changed. And if you really know that they have not changed and they are using the same old place, once again you don't have to ask, right? Now when you are opening the company, they will say you are the branch manager and you visited. You said 2015. Still, you went to number 10 Gall Road, Dehiwala. Today, you are still the branch manager or you are the RM. You know that this person is still there. So there is obvious. You don't have to have the address, but they can use that as the business premises and they can change the address. So that is where you have to be a little bit careful. But if you know that they have not changed with your guarantee, you can proceed. So you should not hurt the customer as well with or overburden the customer, but at the same time you don't have to take the risk as well. If the customer is so good and if you want to give the best service to him, you can send one of your people to the ROC and do a search. That's it. Any person can do a search. It's a matter of filling a small form and they will say, what is your interest? Why do you want to do the search? Can say we are the bankers to the company. That's it. They will give you the books and you do the search. And finally, you have the information with you. So applying for any copy, that's also you can do. You don't have to. You don't have to go to. You don't have to request from the customer. So don't. You have to be flexible, but at the same time, you have to protect your interest as well. Organization interest. If you maintain certain standards only, you can get these documents. Now I have seen that's a common factor. Sometimes the business say, look here, that customer says that that bank is not asking for this document, right? Only you are asking that document. ඔක කියන සාමාන්‍ය. අනිත් බැංකු කවුරුත් ඉල්ලන්නේ නැහැ. ඔයගොල්ලෝ විතරයි ඉල්ලන්නේ කියලා. ඉතින් ඒ වෙලාවට කියන්නේ ඉතින් අනිත් බැංකු ඉල්ලන්නේ නැත්නම් ඔයා මොකටද මෙහෙ එන්නේ එහෙම කියලා කරගන්නේ කියලා. By their coming here, they know that you are flexible. අනිත් බැංකු ඉල්ලන හින්දා තමයි මෙතනට එන්නේ. නැත්නම් ඉතින් ඒවට යන්න තිබ්බනේ. So you have to use your common sense. Okay, let him go. Definitely he will come because they know that you are flexible. Don't be too flexible because finally you are playing with public money. If a facility goes maybe 1 rupee, bad, what happens? You will not be able to pay that 1 rupee back to the deposit. We have more money. වාසනා කරලා තියෙනවා මොකද අපේ හැම ඔක්කොම ඩිපොසිටර්ස්ලා ඇවිල්ලා සල්ලි ඉල්ලන්නේ නැහැ. හෙට දවසේ ඉල්ලුවොත් if we lose the bank trust, if all depositors start withdrawing money, ලෝකෙ ලොකුම බැංකුව වුණත් හෙට කඩාවැ වැටෙන්න පුළුවන්. Right? So that's the risk. Our relationship, our trust is the key point that we can show to our depositors and keep them holding without withdrawing. But if tomorrow all banks, any bank in this earth, not limited to Sri Lanka, even UK, US, Australia, so-called giant countries, if all the depositors start withdrawing money, all the banks will crash because you don't keep money for them for you to pay your depositors. That's the logic. Right? Any questions? So this re-registration, as I told you, those are the old companies. Earlier, we had to file Form 40, and all companies by now it has to be re-registered. If you have not re-registered, under the Companies Act provision says the register of companies have the authority to acquire all the assets, but they're not saying anything about the liability. They can take the assets, but who is going to take the liability is silent. So simply, if you have not re-registered by now, no existence of that company. Be careful if you're dealing, you're in trouble. Right? You are dealing with a company where there is no legal personality or there is no existence of that company. So a register has given authority to remove this company from the books. Right. Now, memorandum of association I explained to you. Earlier, there were memorandum and association and articles of association. Memorandum means the object clause that is for the external parties. So when you are entering into a contract with a company, you have to check the memorandum and see what is there in the memorandum. What are the authorities that they can perform transactions. So if there are restrictions, you can't uh, continue transactions with those on those transactions. But articles is an internal document, articles of association, how you run the business, shareholders' rights, directors' duties, how to do the function, how to use this seal, and so many other things are there. It's for the internal party. But with the new Companies Act 7 of 2007, they removed this memorandum part. As a result, today you can form a company and you can do any businesses. As I told you, there is no restriction. But if you want to form a company with a regulated entity, you have to get the permission from that particular organization. And today the memorandum is no more there, but still if you want to include any objectives of the company, you can include that in the articles, right? Though the memorandum is not there, a company can have objectives. If you take if you want to form a bank today, memorandum is not there, but you have certain objectives, accepting deposit and lending. So you have to include that in the article. So especially the first paragraph of the articles will give you the objectives. So you have to go through those objectives and see whether they have the required company has the required authority to perform that transaction, right? Right. Fixed charges and floating charges. Just 1 minute. Did you receive any assignment document today? Did you have received any assignment?
It is uploaded.
No. Okay.
No, it is uploaded.
It's uploaded, right? So please inform the others as well that I'm going to discuss this assignment requirement next session and request them to join. Right. Any questions? Yeah. Now charges, it can be fixed charges as well as floating charges. Now fixed is where if you're creating a charge over there's nothing to do with this register of companies creating of charges. It's all about what type of asset you are going to create a charge. Now you get when you come to mortgages, you get hypothecation mortgage, you get a fixed mortgages, right? Now fixed and floating. Here, fixed means if you are mortgaging a laptop, it's a fixed mortgage. But if you are mortgaging where you have series of transaction, work in progress, raw materials, semi-finished goods, and finished goods, it's a process, work in progress, right? And you items will raw material will come, semi-finished goods, finished goods moves out, raw material will come because there is a cycle. So if you are mortgaging a set of goods with a cycle, we consider it as a floating. So we create a floating mortgage, right? So this floating mortgage can be used for a long period. Fixed mortgage or fixed charge is fixed on a particular asset. If I have purchased a laptop which is mortgaged to your organization, once the payment is done for that particular laptop, you can't use that particular mortgage for any other facility. So it's done, it's over. But floating will keep on continuing because the raw materials are coming, semi-finished goods, finished goods. Come in and out continuously. So normally a floating mortgage will be created for a long period. Floating charge will be created for a long period. Fixed charges are created for short term, right? So that's the difference between floating and fixed. So as banks, we take floating and fixed both. Especially if you want to create a floating charge, you create a hypothecation mortgage. And if you want to create a fixed charge, you can create create a fixed mortgage as well. Okay, those are the two types of charges that we can create. Right.
So what is mean by hypothecation?
Hypothecation is a separate. It's a mortgage obtained by the banks when you have a working in progress, right? Those we have different mortgages. We have fixed mortgages and floating mortgages. Hypothecation is also considered as a floating mortgage, right? So fixed and for floating. Hypothecation is always used for when you have a work in progress. It's revolving. So sometimes you are not taking for small customers, it may be for corporate customers. I don't know how you are using it, whether to use it as a floating mortgage or a hypothecation. But some banks, they use these two terms, or sometimes they can have two set of documents depending on the type of the customer, depending on the type of the process of the organization. So floating equal to hypothecation, right? So normally we say floating, it can be two ways. Where if you have a work in progress, that is raw material, semi-finished goods and finished good, you use the hypothecation. But a floating charge you can create. Now, for an example, my business is importing laptops and selling. So the laptops are coming, selling. Laptops are coming, selling. So there is only one component in my mortgage. Therefore, I'm using floating. So any given time, my mortgage will cover all the laptops. But in case of hypothecation, the mortgage will cover raw materials, semi-finished goods and finished goods. So I have to add everything and see what is the total of my assets at any given point. So that's the difference between a floating and a fixed or hypothecation. Okay.
So in case of default, is there any difference between the securities that you can give? Because it's a floating or
Sorry, you're not clear, Sampath. Your voice is fed. When you on the mic, there are a lot of sounds. It is difficult to.
in the case of floating mortgages and fixed mortgages, are there any difference when it comes to default when you tell them? No.
Yeah, finally, whether you are using a fixed mortgage or a floating mortgage. Now, for an example, I have mortgaged my laptop, right? I have obtained 150,000 to purchase this laptop, and I have paid 50,000, 100,000 outstanding. Today, I'm defaulting. So you can use that fixed mortgage to recover my 100,000. At the same time, I have a business where I'm importing laptops. I have, according to my turnover, I'm going to say at any given point, I'm having 100 laptops. So the mortgage value will be 150,000 into 100. That is 1.5 million, no? Yeah, 1.5 million mortgage I'm going to execute. So I have obtained 1.5 million from you all. And I have paid 500,000, 1 million outstanding, I'm defaulting. So you can use that mortgage bond and claim 1 million from me. So outstanding, nothing to do with the mortgage. Outstanding is an outstanding. Mortgage is a security what you have taken. So irrespective of the security, finally, I'm liable to pay the outstanding. I don't know whether this is what you wanted because your voice was not clear. I hope this answer will give you the your question. Is it right?
What is very important that whether there are any differences between these two type of mortgages when it comes to recovering or selling
No,
those?
there is no. When you come to recoveries, no difference at all. You have a mortgage for fixed one, same process, floating, another process. It's always now here what happens, I told you, I will explain these points later. What method you are going to use, whether it's debt recovery provisions or money recovery. So whatever the method you used, finally, these are secret documents. You have to be 100% perfect set of documents, nothing, no change. Process is the same. I don't know whether you have an answer for that particular one. That is why you're asking from me. For my knowledge, there is no change. It's the same process fixed mortgage will cover the fixed assets. What I'm talking in my example, it's laptops. Floating mortgage, it will cover raw materials, semi-finished foods, and finished goods. So you can claim all those from the courts. In the first scenario, you can claim only laptops. That's the difference what I see. I don't see any difference between the action with regard to these two securities. Okay.
What I wanted to know, sir, why there are two type of charges. Anyway, it's okay. Because depending on that picture floating, that's the nature of the security.
Yeah, so the concern is where now if you are in a work in progress, you can't use a fixed mortgage, no? You have raw materials, semi-finished goods, finished goods. Then you have to have 3 mortgages for that. One for the raw material, one for the semi-finished goods, one for the finished goods. Right? So you can't have, that's why hypothecation or floating is used for covering all these 3. But if you are selling laptops, it's only one mortgage, one type of asset will be there. No, not in stages. So that's why, due to practical reasons, the banks, they follow this floating and fixed. Okay. Sorry, Sampath, I can't hear you at all.
Agreement should be different. There should be different forms for these two.
Agreement, definitely there will be differences between these two documents. You can't have the same names. Because you are one mortgage, you're mortgaging a fixed asset, fixed item. In case the second one, you are mortgaging different assets where it's in a work in progress, where it's changing, it's revolving. So these are two things. So definitely the terms, agreements, everything should be changed. But it doesn't make any issue for your recovery process.
Okay.
ඔයාට හරියට වෙන මොකක් හරි මගෙන් චෙක් කරගන්න ප්‍රශ්නයක් තියෙනවා නම් ඒ ප්‍රශ්නය අහන්න. මේ ඒක එහෙම එකක් තියෙනවා නම් අහන්න මට ඒක හරියට එක්සැක්ට් උත්තරයක් දෙන්න. අර ගොඩක් වෙලාවට මම දකිනවා සමහර ස්ටුඩන්ට්ස් they have a problem behind but they don't want to explain the problem. ඉතින් අර වටේ ගිහිල්ලා තමයි අන්තිමට ප්‍රශ්නෙට උත්තරේ හදාගන්නේ. එහෙම වෙන්න එපා. ප්‍රශ්නයක් තියෙනවා නම් මේක මගේ ප්‍රශ්නේ මෙන්න I want an answer for this. So then it's very easy and very specific. මං හිතනවා මං කියපු උත්තරේ නෙමෙයි ඔයා බලාපොරොත්තු වෙන්නේ ඔයාට තාම ඔයාගේ ප්‍රශ්නේ ක්ලියර් වුන්නේ නැහැ කියලා. එහෙම නේද සම්පත්?
No, it's okay now.
Okay. Fine. Company name and number. So for any document executed from a company, you have to include this company name and the number, right? If you are going to publish a death notice on behalf of your company, you have to include this number and the name. Those are mandatory, right? So registrar have authority if you don't include the name and the number. So the uniqueness comes with the number. Normally you all know that in case of a company, there is only one company in one name. You can't have 2-3 names in one name. Since all these companies are registered at the register of companies, and before you form a company, you have to get the name approval. If someone has used the name, you can't form a company in the same name. But in case of a sole proprietorship and partnership, you can't do that because all these sole proprietorships and partnerships are registered in the divisional secretariat, right? So I can form a company in the name of XY Enterprises. Any one of you all can form a company in the name of XY Enterprises. Right? So that's why it's very difficult to control. So we don't know who is behind this XY Enterprises. But when you come to companies, that is not the case. Only if you have XY and Private Limited, there is only one XY Private Limited in Sri Lanka. And that particular XY Private Limited is registered at the Register of Companies. So there's a unique number and unique name, right? So when you are publishing your documents, advertisement, or any other information on behalf of the company, it can be a vacancy, it can be a notice, right? You have to use the number and the name. And if you are printing handbills, distributing, Your envelopes all should contain this number and the name. If you don't include those two, register of companies have the authority to take action against the directors. So that's the little bit, I have not seen any action taken by register of companies, but they have the authority. Right, no compulsion of to have a company seal. Company seal, you can't say that because of the new Companies Act, it changed the, now you don't have to have the common seal. But there are companies who are using the common seal, so you have to check the articles and see whether they are using the common seal or not. If they are not using, either it has to be clearly stated in the articles, or you have to get a clearance or board resolution stating that they are not using the common seal. So earlier it was mandatory, now there is a flexibility, but it doesn't mean that you as the banker can come to a conclusion to say, because of this 7 of 2007, now we don't have to get that. There are companies who are using still, old companies, there are new companies who are using the articles as well. Okay. I explained what is ultra vires. So anything within the authority, it's ultra vires. Intra vires. Anything beyond the authority, it's ultra vires. Now, when you come to solvency test, it's a test used for to pay if the company is going for a distribution. Most probably, in case of a dividend, you have to fulfill this requirement of solvency, right? So the point is, where now when you're running a business, it has to be a solvent business. So one responsibility for you two is to ensure that your business is solvent, right? You can't, if it is insolvent and if you don't have the capability of going concern, then you will have problem, right? So after paying a dividend, what do you mean by a dividend? What is a dividend? Pushpa Kumara, what is a dividend? What do you mean by a dividend? Pushpa Kumara? Sandhya, what do you mean by a dividend? Sandhya? Nuvani, what is a dividend?
Profit sharing among the
A
shareholders.
distribution to the shareholders through the profits.
Yeah, it's a profit. It's a return on the investment. That you go and open a deposit, you'll get an interest. Similarly, when you go and invest in a company share, the company must pay you some good return. So that's a return on investment. So return on investment is given by way of a dividend. Dividend can be a cash dividend or a scrip dividend. So cash dividend means money will flow out from the company's books, right? You have to pay cash. But scrip dividend means you are adding shares to the company's stated capital, and the money is not flowing out. So as a result, in recent past, most of the companies are going for right issues, sorry, scrip issues, not for a right issue, not for a dividend, cash dividend. Now, if you see the Central Bank of Sri Lanka last year as well as this year, they have told if you are going to pay a dividend for shareholders, your accounts have to be audited. So it clearly shows that the company to audit and pay dividend, no objection. Because finally, when you become a shareholder, you need to get a return on that, right? So at the same time, if the company goes on insolvent liquidation, what happened to the shareholders' money? Yes, Nuvani, what happens to the shareholders' money if the company goes on insolvent liquidation?
They lost their money.
Yeah, they will lose the money. Insolvent means you can't pay your debts.
Yes.
Liquidation is closing down process. So if you go on an insolvent liquidation, your shareholders are not going to get a single cent. Right? If you Deposit in a bank, if the bank goes on liquidation, at least you will get it for each bank. You will get, I think it's now 1 million, no? Insurance over the deposits, it's 1 million. Anyone knows about that? Dennis, do you know how much an insurance on deposits?
Earlier it was 200,000. I don't know whether they have increased it recently, sir. I'll check and let you know.
It was 600,000
Yeah, sorry,
earlier.
600,000.
600,000.
600 earlier, yes.
Now I heard that they have increased it up to 1 million. Whatever, right? But in case of a shareholder, if it is insolvent liquidation, they are not getting a single cent. So that seems to be that the shareholders are taking huge risk by investing in a company. So the shareholders are now for an example, if a shareholder invests 1 billion, 1B, and if he has to lose everything, what happens? No gain at all, right? So that's why you have to keep them happy and make sure that you give a reasonable return for them. So unfortunately, sometimes the regulators might put pressure to say the companies or to the financial institutions that you're not supposed to pay dividend uh, with certain restrictions. So at the same time, we have to understand that we are here because of shareholders. All of us are, other than the state banks, private banks, those who are working, all of us are working today because of the shareholders have taken the decision to open or form a company. So that we have to understand, right? It's true that the depositors' money is higher than the shareholders' money, but still, uh, we can't just say that we should not pay anything for the shareholders because the shareholders' risk is very high.
So excuse me, that amount it has been increased up to 1.1 million.
1.1
The insurance
million.
was 1.1 million.
Okay, thank you for updating that. So still, it's not a big amount, right? It's 1.1 billion per bank. Should be 1.1 million per bank, no? Yeah. So if you have in 10 banks, if all banks go crash, you will get only 1.1 million into 10, no? I don't think it's per deposit, it should be per bank. Just check that as well and inform me next session.
So in case of dividend declaration, whether the central bank prohibit issuing cash dividend only, the discretionary payments?
No, what they say is, if I'm not mistaken, whether it's cash or script.
No, sir, it's a cash. No,
Cash,
if
yeah,
if
script.
the total capital adequacy is satisfying, they can declare dividends, but cash dividends are prohibited because of this liquidity. But scrip dividend, I think they can pay.
Yeah, script dividend, no restriction. Cash dividend, it has to be after auditing. Yes.
After auditing, and if the capital adequacy is satisfied.
Is that they say? That direction was with me. Refrain from increasing, okay, exercise prudence, refrain from it.
I mean the latest direction issued on 13th July.
Yeah.
13th July, number 11 of 2020.
You have that document with you?
Yes, we can refer to it, the central bank website
Okay,
under the
restriction that
banking laws banking
Sri
directions.
Lanka shall differ. Yeah, every licensed bank incorporated or established in Sri Lanka shall defer payment of cash dividends until the financial statements for the year 2020 are finalized and audited by its external auditors. This is one of 2021. I don't know whether they have issued something differently. Every licensed bank can incorporated outside Sri Lanka defer representing profits already. Yes. So simply, if you are paying cash dividends, you have to it has to be audited. And what is the direction that you are referring? I'm referring one of 2021. What is the one you are referring?
Number 11 of 2021.
Okay, okay. I don't have that one. I will check that. Right, right. Thank you. Right. So the idea is where now these are separate restrictions imposed by the regulator. But when you are paying under the Companies Act, if you are paying a dividend, you have to ensure that you meet the solvency test requirement. Solvency will give a confirmation that the company, after paying dividend, the company can continue. So there is no damage done to the company. You can still continue the business even after paying your dividend. So directors must give an undertaking. Based on the undertaking of the directors, the auditors will have to confirm the same as well. So the point is where if the directors declare wrong information and if they are trying to pay dividend, they are personally liable. And if a shareholder has taken money where the company can't pay, shareholders are also, they have to return the money back. So the problem is where now this was a new addition for the 7 of 2007 Companies Act. Uh, if you can't maybe that you have profits, but if you can't fulfill the solvency test requirement, you will not be able to pay a dividend for your shareholders. So the problem is where now if I have invested 1 billion in a company and if the company is not going to pay me a return for 1 billion, then there is a problem. No, if you can keep this 1 billion in a bank, 1 year fixed deposit, you will get around 4 to 5 or maybe 6. Whereas when you go and keep this 1 billion in a company, I'm not getting a single cent. And top of that, in case of a liquidation, there is no assurance that I will get the money. Especially insolvent liquidation, I'm not getting a single cent. So I'm taking a huge risk. So while knowing that risk, people invest. So that is why you have to have a little bit flexibility on that. Recently, I heard under the tax laws, anyone who is paying taxes for your income, normally your taxes will get deducted from your salary. But what I heard was now the government, in order to encourage people to invest in shares, any capital investments on shares are also exempted from the tax. So normally, if you're paying tax, you have 1.2 million credits if you can claim. Now, if you are in a tax paying slab, especially now you can claim housing loan interest, if you children's education expenses, school fees, right? If you're buying books for your children, those are also exempted. And if you have any life policies, those are also exempted, the premiums. And recently what I heard was if you are investing in the capital market, that is the share market, all those investment is also exempted. So just see if you are paying taxes, just see whether you can get a benefit out of that, because it's a big amount. 1.2 billion credits you can recall from the authorities if you're purchasing shares, right?
So is it investment cost or the capital gains excluded?
Is what I heard was the investment cost. Now if you want, you can purchase today and today itself you can sell it. The purchase cost, if it is 100,000, that you can claim. That's what I heard. I also was the understanding that it's the return what I get. But what my agent told was it's not that, it's the capital investment. So I want to recheck and see whether it's that the case. Maybe that they wanted to. I don't think that they will keep this for a long period. Under current conditions, they might want to encourage people to invest. So that may be the reason, even giving that tax concession, if the people are investing, that may be their aim. But I don't know how it's working. It's a little bit I have to study and see, right? Okay. So the solvency test, what it says is, if the measurement is where your total assets should be more than your total liabilities and stated capital. Total assets should be more than your total liabilities and the stated capital. Stated capital is the shareholders' money. So once you decide to form a company, you can form a private company. Then you gradually you want to grow. Then you convert into a public company. Then the public company, if you want to list in the market, you have to fulfill the listing requirements and you list that company in the listed market, right? And uh, in a such a scenario, the money what you get from the public shareholding is called the stated capital. So the total assets should be more than total liabilities plus the stated capital. So there was some issues with regard to this when you come to arriving at this decision. Now this total asset, sometimes it can, you have an asset value but you're not earning profits, right? Now for an example, I can remember this when this rule came. Galadari Hotel was not doing well and they were not making profits, but their solvency was better than companies who are earning profits, because the Galadari, they revalued their asset, their building. It's in the heart of the Colombo, so there was a huge price for that asset, and their solvency was very solid comparing to a company who was making profits. So those are the practical difficulties. I have to check and see. I'm not sure there was a solution for that. I will check and I will let you know what was the overcome, how to overcome that, what are the things that the authorities did. So initially when the Companies Act was introduced, there were a lot of issues and concerns, and unfortunately or fortunately still none of those issues were addressed. There was no amendment for that. Even if you can remember, I hope that we were in the grey list, right? And in that, after that, what really happened was the Companies Act, they wanted to change the Companies Act to get the beneficial ownership. But up to now, I have not seen the amendments to the Companies Act took place. And as a result, still there is no law in the country to get the beneficial ownership information. So that is a little bit pathetic. Now we are not in the grey list, but all of a sudden under pressure, they might come and say, look here, now we are going to put you into blacklist. So that's the worst thing that could happen to a country. And under current circumstances, if that's going to happen, there'll be a huge problem. We won't be able to do anything, and we won't be able to get foreign currencies from any other country. If we fall into blacklist and still we have currency issue. So that's the situation. So hope that they will take appropriate action. Hope nothing will happen. No further problems will come to Sri Lanka. Unfortunately, that's a pathetic situation. One after another, we had problems. To see the last 3-4 years, unexpected problems. So that's how it goes. Now, have you all taken all the injections? What's the situation? What is your position in your banks? How are you all have you all controlled this current situation? Dennis, what is the situation?
We have asked all the branch managers to speak with the relevant MOH and provide the facility to get the two vaccines to all employees.
Hmm?
So it has executed, sir. I think all the in my region, all the most of the branches they had they taken the first, at least the first dose.
Okay,
Most
what
of
is
the
the, yeah, how what is the impact for your bank with regard to this virus? Have they affected? Some have got affected, or is it
yes,
under control?
affected and not under control anyway. Affected and day to day we are closing branches
Okay,
and close down the branches due to these infections. But the thing is, once we close maximum 2 days, but once we close down the maximum 2 days, and then we allocate the relief staff from nearest branches, and we are functioning again
as
to
usual.
with the limited function. No, not as usual, with the limited functions.
Limited functions, right?
Yes.
So the point is where all the banks have the same set of problems. Now it's very fast, it's moving, and unfortunately the authorities should have given more priority for the banking sector, because we were in the essential sector from the inception itself, but there were no priority given for the banking sector. And instead of that, even I think the health, three forces, police, right, and garment sector, bankers, they should have, we should have got the priority, but unfortunately never happened. And now what I see is across the country all the banks are having problems, but replacing a staff is not easy. And in certain instances you can't close down the branch, you have to continue with sanitizing and removing the close contacts. So the problem is very very tough, I would say. We all have to be very careful on that aspect, because if something happens, you, it's beyond our control, but at the same time if you take proper actions on that, you also don't have to be very careful. Don't worry also, because I heard one of the doctors was saying, okay, now if you have taken the vaccines, at least one, and also if you follow the required practices, nothing to worry, because only 2% will get badly affected out of 100. So I hope that none of us will be in that 2%. And only thing, you should not get panic if you get the virus. So that's what his advice, and he gave a lot of short methods that you can get more immunity. Immunity is the most important thing, but don't remove your mask inside the premises. That is the biggest mistake what we do. Be careful, because all of us are working for AC environment. That is the biggest problem. And sometimes when you want to have your lunch, you remove the mask, so then there is a risk, but at the same time no option for that as well. So try to minimize removing the risk inside the premises. That's important, right? And at least try to take some precautionary actions over that. The situation is not so good. All the banks have similar issues, because it's very fast, its spreading is very fast. So but don't worry, make sure that you have the required immunity for that. It's all about, we have to wait till the, it's a struggle between the time and the death. So what to do? So hope you will be able to control and finish all these problems, because we somehow all the banks will get exposed, no, whatever services are restricted, finally the banks will be opened. So unfortunately, customers, sometimes the customers are coming without a reason also, just to do small things. They also can't understand the gravity. So that's the biggest issue. And make sure that you try to control, even request your staff to not to drink water all the time. Try to have some limited instances where they remove the mask inside the premises also. Let's try to bring precautionary actions, and try to have different teams, in case if you have a problem with one team, you will be able to replace another team. Operations, of course, they can do, because there are more numbers, but across the organizations you can see a lot of numbers are increasing. It's common for all the banks. But we at the same time we have to strengthen our controls as well. So it's a very crucial situation, right? Any questions? Now, when you come to financial assistance to buy its own shares, now earlier the Companies Act did not provide any provisions for companies to buy its own shares, or they did not permitted any company uh, or the financial institution to give any loans to buy its own shares. But with the new Companies Act, they gave uh, provisions. If you want, you can buy your own shares. Even for that, you can obtain a loan from a financial institution. So the provisions are there, but with a lot of controls. You can't just take money, borrow, just because finally why you want to buy back your shares is for you to give money back to the shareholders. So the authorities will not easily permit that, right? They will put restrictions, and based on the restrictions only you can do it. But there are provisions in the Companies Act for you to obtain a loan to buy back its own shares. So as I told you, stated capital is the amount what you are going to receive from selling shares. Recently there were two issues. One is the prime land, they had an issue, and subsequently this another
Jet holding.
jet holdings. They had that jet holding, it came to the market this week. What happened to the
Yes.
price?
On 12th, it's declined, sir. Now it's 22.
At what time they sold the share?
26, I think. Yeah, 26.
Even on the very first day, it was not. Did not come with
Yes,
a premium.
on the debut, on the very first day, it declined by went to the high of 29, but couldn't manage and close below the issue price.
On the very first day itself.
Yes,
What happened to prime lands?
prime land, it also not doing well. Only Windforce is above the issue price now.
Yeah, what was the Windforce price?
It's around, I think, Windforce. Actually, around 4. It came to the market. I think it's now 19 levels.
Okay, what was the selling price? Any idea?
You mean
Wind-
Windforce?
Yes, yes.
I really can't remember.
No, that's okay. That's okay. Are you trading shares? Because you have a very good idea about shares.
I'm
what?
doing little bit.
Yeah, that's right. Are you earning profits or are you running at a loss?
These days running at a loss.
Overall, it's running at a loss. So if you have a good, if you have a stockbroker, a good stockbroker who will have an interest, because the point is where we are dealing small quantities, no. So sometimes you don't get the required priority. So they have.
I actually don't use the brokers. I do it myself.
Okay, that's fine. That's fine. Okay, at least when you're working for a bank, you know how the things are playing. But be careful, because don't, once you get a profit, take that profit out. Don't reinvest it. That's where you go wrong. You have a fixed income, and at least try to take 25% out of that particular profit out and reinvest 75%. So then you have a profit percentage as well. So as human beings, we sometimes we do something different. It's out for me. I normally don't invest in the sense I can't do that, right? So reduction of capital, once again, if you want, you can reduce the stated capital. Earlier I told that if you want, you can get the facilities from a financial institution, and reduction is the whole idea that you realize, okay, it's too much in the market and you want to reduce it. But sometimes the banks will go against the companies to say don't reduce it, because it will affect the stated capital. Because when you are lending to a when you are lending to a company, you will always see what is their stated capital, right? Then now, I hope that all your offer letters, all your bank's offer letters will contain a clause to say if you are reducing your shares, if you are going for a buyback, right? Definitely, you will be sorry, yeah, you will be the customer have to inform us, right? So please make sure that when you are issuing your offer letter, go through your offer letter and see whether you have these conditions when you're buying back your shares, when you're going for a major transactions, or when you're going for a sale of your business. You need to inform the banker. As bankers, be careful when you are dealing with companies. Sometimes the bankers thinks that they are very comfortable with dealing with companies. So practical sense, companies can do so many things without your knowledge, and finally they can say, look here, we are bankrupt and we are not liable. So be careful when you're dealing companies. You have to have extra careful, extra vigilant on that. 100% KYC should be there for companies, because those are artificially created companies, right? Now if it is an individual, I have a fear because I don't want to default you. But company is a tame boat. People behind the company can vanish and the company will only be there, right? So be careful. There are a lot of things that you can do behind a company name board. So when you're lending to companies, you have to be very careful. And on top of that, it's very difficult to understand the company behavior. Now, if you see a lot of group companies are there, their processes, their structures are very complicated. It's very difficult for you to understand as a banker what they are really doing it. So in such an instances, if the structures are very complicated, you have to be very careful and you have to take appropriate action, how to check and balance, check and see how these people are doing. Okay, it's important. So when you come to impact on reduction of stated capital, it will impact the credit, it will impact the quality of the company. So we don't allow them to reduce the stated capital because it reduces the shareholders contribution. So normally when you are lending, you will check the shareholders contribution. In certain instances, sometimes you request them to increase the shareholders commitment capital, right? In such an instance, if they have reduced, then it's going to be a problem. So please make sure that you need to have intact with these companies and make sure that they are not taking advantage out of that. So issues of shares, company can issue shares in two aspects. One is an initial public offer, where you decided to go public in the listed market. That's called IPO. And subsequently, a company can issue shares for the existing shareholders. Those are called right issues, right? Subsequent issues. So if I want to go public, I have to fulfill the stock exchange rules and regulations. It's not easy for me to just issue shares, because no one is going to buy my shares if I don't have a credibility, if I don't have any history. So you saw that two examples. Prime Land, they had a very good history. Jet Holdings, they had a very good history, but still, once it comes to the market, especially in this kind of a situation, they can't capitalize on their advantage. So it's negative, right? So the point is, where when you see one or two this negative, nothing to do with the company, I would say it's all about the market. Can be market manipulations also. People are trying to drop the share and purchase more shares. Those people who couldn't purchase shares, they might be collecting shares at a low price. So that's also possible. So then what happens? The people will lose confidence. They will not purchase shares from the market, from an IPO. So rather than purchasing from an IPO, they will see, okay, better to purchase from a secondary market and sell it, right? Just keep a margin, sell it. So that's trading. But even whether this is a good time for you to trade is a question, because if you see the last few days, what I saw was it was declining. No, am I correct? Is now Nuani, am I correct? Is that the
Yes,
trend?
sir. Yeah.
Yeah, yeah.
Trend is decline.
trend is decline. So we don't know how long it will go down, right? So if you have excess money, keep the money, don't purchase shares. And if you decide, okay, after some time you will decide, you will get to know this is the minimum. So at that time, purchase shares, but don't expect to overnight gain. You'll have to keep for at least until they finish all these vaccinations and where the numbers turn to the other side. So it will take a little bit more time, right? So, but it's those who have money, investing in shares is a good instrument right now, because you don't get any deposit return, or purchasing a land. Land purchasing is also good. Now, what I know is people who are outstation, they purchase lands, a large 1 acre, 2 acres, they go and purchase, expecting that they can. Sometimes what they do is they purchase and they keep it for their children's education. So after 10-15 years, almost the price will go more than 10 times, because there is a scarcity of lands. So I think that is the best option. Just think about those things as well. Right. Now, this prospectus is the most important document when you want to issue shares in the public, because depending on the information which are available in the prospectus, people purchase shares. So if you are going to include wrong information in the prospectus, it will create a liability over the directors, because the directors are responsible, personally responsible for the contents of the prospectus. So as a result, directors must ensure that they give the correct information when you're there public. Prospectus means you indicate what are the opportunities available in your company for the people to come and invest. So 100% based on the information which are there in the prospectus, you invest, right? So that's why you have to ensure that you include all correct information in the prospectus. You are not supposed to include wrong information to mislead the market. So and it's a criminal liability as well to including wrong information in the prospectus. Okay, any questions? Any questions? Any questions? No? Right. Right. Then different types of shares. You get the ordinary shares are the shares that those are issued at the IPO. Preference shares are share. Normally what happens, payment of a dividend, there is no assurance the company will pay you a dividend, right? So if this year, if the company decided, no, we are not going to pay a dividend, ordinary shareholders will not get a single cent. Now, if you have purchased, if the company has issued preference shares, now this year at the time of issuing preference shares, you agree with the company a certain fixed dividend. You say 1 rupee per share every year, right? Now, if the company has not paid 1 rupee this year, next year, if you are going to pay this year 1 rupee will get accumulated. So next year you will get 2 rupees. So that's the advantage when you come to preference shares. But I have not seen listed entities issuing preference shares, but unlisted entities, they can issue preference shares. Deferred shares, those are shares that your payment will be deferred. There are convertible type of shares as well. There are non-voting shares. The main difference between voting and non-voting, voting shareholders can vote at an annual general meeting. Non-voting, you can't vote, but you are an owner, right? So if you see the most of the list, almost other than Sampath, all other private banks, they have voting as well as non-voting shares. HNB, Commercial, Pan Asia, Ceylon, NTB, they have voting and non-voting. So the non-voting shares will also bring capital, but you can't vote. So in an annual general meeting, normally shareholders, they can vote to appoint directors, approve the accounts, approve the dividends, appoint the auditors, and approve the uh, call donations. Right? These are opportunities available for shareholders to vote an annual general meeting. So if you don't have the voting right, you will not be able to vote for those events. Redeemable means after some time, uh, you will get the money for your shares. You are not a permanent shareholder. You are there for a short period where the company wanted capital, and once the period is over, you will get back the shares. Now, in case of debentures, now you issue redeemable debentures. And if you are issuing, all the banks who are issuing under Basel requirements, you will be issuing redeemable debentures. So in case of insolvency of the bank, you don't have to pay debenture holders. Instead of debentures, you will have to issue shares. So the point is, where in case of insolvency, there is no value for your debenture, or there is no value for your share. Debentures, definitely you are not getting any money. Once it converts to share, you will not get a single cent. So that's a risk, but finally it's working under the Basel requirements. Right. Right. Any questions? I will stop that from that particular point. Do you have any questions? Yes. Any questions? So please make sure that inform the others as well, that I'm going to take the I'm going to sorry, I think I have, the screen has gone. No, sorry about that. I was under the impression that you can see the screen. Sorry about that. So inform the others that I'm going to take the assignment and go through the assignment and ask whatever the questions that you all have to answer. And if possible, try to bring a question for us to discuss at the classroom. So please bring your questions, all the questions what you all have. It can be something to do with operations, something to do with shares, something to do with compliance, right? Something to do with legal. I will try to assist with my limited knowledge, and we can find solutions for those problems. Okay. Any final questions?
Sir, the preference means that it can be they are given a preference over the others, ordinary shareholders at the time of liquidation, right?
Preference shareholders, yes, no, preference shareholders will get the priority over the dividend, not in the now it happens. Now when you come to preference shareholders, they have certain features. Now they can have preference over dividend, they can have preference over liquidation point as well. Above the ordinary shares, you can have the preference shareholders. Now in certain instances, they will say you will get the preference only for the dividend, not for the winding up process. So then at such instance, preference shareholders are also considered as normal shareholders. So what features that you are going to include into your share is your call. But normal understanding, preference shareholders will have the preference over dividend, not the equity part, right? But if you want, you can have that feature as well. So it depends on the company, how they are going to issue their preference shares.
Preference over dividend means what, sir?
Dividend in the sense, now at the beginning, now if my company is going to issue share for all of you, I'm going to issue preference shares. So at the beginning itself, on the day one itself, I'm going to agree with you. I'm going to pay 1 rupee per share. That's fixed for every year. So for an example, I agreed today, but next year, this year I couldn't pay you any dividend for any shareholders. So none of the shareholders will not get a single cent, as well as you are not going to get as well. But this, since I have agreed on a dividend, this 1 rupee will get accumulated for next year. So then next year's 1 rupee plus this year's 1 rupee, you are going to get 2 rupees. if the next year also I can't pay any dividend for any shareholder, this year's 1 rupee, next year's 1 rupee, it will carry forward for the third year. So your dividend is assured at any given time. But the point is where if I can't continuously pay you a dividend, though you are a preference shareholder, you will not get anything. Right? At the end of the day, you will end up with nothing. So these are all features. That is what I told you for listed entities. Now you don't see these preference shareholders, but unlisted companies where they have a profit, they can issue preference shares, preference for dividends. Okay. Anything?
So the other thing is, there's the difference between liquidation and winding up. No, liquidation applies for private limited companies, winding up for others. Is it?
No, now liquidation, winding up, right? All finally the idea is you close down the business, right? It's a process. Winding up is the process which is defined in the Companies Act. Liquidation, whether it's insolvent liquidation or solvent liquidation. Liquidation means you sell your assets and settle the liabilities. For me, I don't see any big difference between these. But finally, it's a closure of business. So I will just see whether there is a technical difference between these two, and I will let you know. For me, it's finally closing down the business. How the process you follow for closing down the business is which is laid down in the Companies Act. Right? There's no big difference. What you are trying to say is liquidation is for the small companies and winding up for the big companies. Finally, you're closing down your business. The responsibility is to sell your assets and settle the liabilities. So as far as you can do, pay your liabilities, there's no problem. But I will see whether there is any technical difference between these two. For me, it's finally closing down the business.
The other thing is, can we have a past paper of this subject?
Past paper, I will check whether from the institute whether they are issuing any past papers. If so, I will request them to give a past paper. That's not a problem. They have the past practice of giving a past paper. I can ask them to release you all a past paper. That's not a problem.
Okay, sir. Thank you.
Okay, that's it. So take care and make sure that you take all precaution action. Look after your teams, look after your families, and we'll meet next Saturday, same time. Okay then, thank you.